Trading is a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. Fix your mind, fix your trading. Fix your mind, fix your trading.
Welcome to the TP Masterclass. On behalf of Cliff Cheqona and the entire TP family, we're honored to have you here. You didn't just join a live session. You stepped into a transformational experience designed to help you master your mind, align your emotions, and trade with clarity and conviction. We'll be starting shortly. In the meantime, settle in and prepare your notepad. Like the stream, subscribe if you haven't already. And most importantly, invite someone who needs this. Because around here, we don't just trade, we transform. Let's get started soon.
It's a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. Fix your mind, fix your trading. It's a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. Fix your mind, fix your trading. It's a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. Fix your mind, fix your trading.
What is the TP family and how do you become part of it? Don't worry, if you're watching this, you're already part of the TP family. Now, before you ask, no, it's not take profit. That's the first thing traders think, right? TP stands for trading psychology. When Cliff Cheqona created this community, he didn't want to make it all about himself. He wanted to create a space for traders built around a simple truth. Most traders lose because their mindset isn't ready for success. So what's the TP family? It's not a company. It's not an organization. It's a movement of traders who are done chasing shortcuts, done trading emotionally, and done feeling like they're alone in this journey. Now, let me be clear. We're not here to build another Telegram or Discord group. You don't need more chats or endless notifications. All you have to do is follow our content on YouTube, TikTok, and Instagram. That's where we deliver everything. Masterclasses, podcast clips, mindset tips, and even those hard truths no one else will tell you about trading. Our vision for 2025 is simple: education. We teach traders what really matters, not just strategies, but the mindset behind them. Through our TP Masterclass, podcasts, and content, we make sure traders know how to manage themselves first. Community. The TP family is all about connection, but instead of chat rooms, we meet through meaningful content that actually helps you grow. Tools. We're creating journals, simulations, and practical resources to help you track your progress and improve your trading behavior. The TP family is here to change the way traders think forever. We're not about quick wins. We're about creating strong, resilient, unstoppable traders. Welcome to the movement. Let's make 2025 the year you fix your mind and fix your trading.
Hi, TP family. Hello, everyone. Hi. How's everyone doing? I have missed you guys so much because last week we met and then throughout the week we didn't meet and now we are here. But I've missed you guys so much and I am so glad that you have tuned into another TP Masterclass once again. I am Tennyson Shells, as many of you know by now. And I just wanted to start off by showing some love to everyone that joins this masterclass every single week. Well done. You deserve applause from everyone for always showing up on time to be here with us. Thank you. And I would also like to know where you are tuning in from or where you are joining us from today. If you are in Ghana, Nigeria, South Africa, UK, Kenya, South Sudan, where else? Dubai, America, US. Just put it in the comment section and I will give you a shout out when I come back on the screen again. And also, if you are watching the replay, just put replay in the comment section below, right down there, and then I will know that you were here watching with us, even though it's no longer live. And also, if you are a first timer joining us today, please, 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 I just want to say big welcome to you and thank you for joining us for the first time ever. And I really hope that you enjoy this masterclass as the previous one. So, yeah, as the previous one. And if you're also a first time, I would like you to also go on the YouTube channel for the playlist where you will see a video titled "What Really is Trading Psychology." That is where we want you to start from, because that video will help you understand what is really trading psychology and also why we are doing the TP Masterclass and everything else that we do on this channel for the community. And also, we also don't just talk about charts. We deal with the mindset behind the trades that every traders take during the week. Another thing we also do is that from Monday to Friday, we post what we call the TP declaration. It's not just a picture, it's with a few powerful words written on it. When you see it, do not scroll past it, pause, read it out loud. Sometimes we give instruction that you have to repeat it 7 times in front of a mirror. So make sure that you are also doing that every single time that you see the post for the TP declaration. Do not ignore it, participate, and yeah, just align yourself with your future self before you go onto the market to trade for the day. And another thing is, I just want to take a moment that wherever you are, just breathe in and out. You can practice the 478 breathing techniques where you just breathe you inhale for 4 seconds and then you hold for 7 seconds and you let go for 8 seconds. So 478 technique. It will help you align yourself with today's masterclass. Be ready to be here and also to participate within the masterclass so that you are not just watching us, you are taking notes and you are journaling your thoughts, your questions. And yeah, because at the end of the live, Cliff will do a Q&A. So if you have any questions, you can always jot it down and you can post it when the time comes for you to ask your questions. So make sure that you are not just taking the notes, you are also learning and taking into your system of what you are learning from the TP Masterclass. And another thing I would also want to remind everyone is that this space is built for healing, clarity, and truth. So if anyone in the comment section or the live chat is trolling or spamming or distracting others, I will personally remove you from the live. You wouldn't be able to participate with everyone else on the live. We are not just here to play, we are actually here to transform our minds. So as we are doing so, we have to be respectful of the others that also join us on this journey. So yes, respect this space and honor the process and do not distract others. So let's just get started. I'm just going to come off now and then Willis will come up with the book summary of the month, and I will see you guys very soon. Thank you. Bye-bye.
It's a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. Fix your mind, fix your trading. It's a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. Fix your mind, fix your trading. It's a mind game.
What is the TP family and how do you become part of it? Don't worry. If you're watching this, you're already part of the TP family. Now, before you ask, no, it's not take profit. That's the first thing traders think, right? TP stands for trading psychology. When Cliff Cheqona created this community, he didn't want to make it all about himself. He wanted to create a space for traders built around a simple truth. Most traders lose because their mindset isn't ready for success. So, what's the TP family? It's not a company, it's not an organization. It's a movement of traders who are done chasing shortcuts, done trading emotionally, and done feeling like they're alone in this journey. Now, let me be clear. We're not here to build another Telegram or Discord group. You don't need more chats or endless notifications. All you have to do is follow our content on YouTube, TikTok, and Instagram. That's where we deliver everything. Masterclasses, podcast clips, mindset tips, and even those hard truths no one else will tell you about trading. Our vision for 2025 is simple. Education. We teach traders what really matters, not just strategies, but the mindset behind them. Through our TP Masterclass, podcasts, and content, we make sure traders know how to manage themselves first. Community. The TP family is all about connection, but instead of chat rooms, we meet through meaningful content that actually helps you grow. Tools. We're creating journals, simulations, and practical resources to help you track your progress and improve your trading behavior. The TP family is here to change the way traders think forever. We're not about quick wins. We're about creating strong, resilient, unstoppable traders. Welcome to the movement. Let's make 2025 the year you fix your mind and fix your trading.
Okay, guys. Let me know in the chat if you guys can hear me okay. Let me know in the chat and we will get started. Let me know in the chat if you guys can hear me clearly. Just type some number ones in the chat. Welcome to the team. You guys are like my team now. I'm not going to say welcome family. I'll just say welcome team. Everybody's a part of it. Loud and clear. Thank you very much, Mr. Nelson. Thank you, Mr. Emmanuel. And yeah, there we go. I would love to say a warm welcome to each and every single person. But also before I do that, I'd just like to say thank you once again for the lovely introduction by Tennyson Shells. And a warm welcome to each and every single person tuning in from around the world, from Africa, from Asia, from Europe, from the States, United States, that is. Yeah, I'd just love to say welcome. Thank you very much for tuning into this week's session and this week's masterclass. It's always an honor and a privilege to actually be here. It actually truly is. I'm not just saying it because it's a part of my speech or maybe I've added it in last minute, but it absolutely is an honor to be able to share this book review, not just as a book review, but very simply kind of a bit like a life experience or a life change, a mindset change, but doing it with you guys. I always say this on every single call. I say that I am, as much as I might be presenting, somebody might see me as some sort of mentor or a coach. Though I do those things. Sometimes I do help out. Sometimes in the sense of I mentor somebody when it comes to trading. I give people advice here and there. I always, regardless of every single scenario, see myself as a student, always remaining a student of the game. Why does that actually help me? Well, it helps me because it places my mentality and my mind in such a place of remaining humble and always in a place of, humility, gratitude, and always room for improvement and learning and growth. I never want to ever be in a position where I believe that I've made it, I've achieved it, and I'm always the guy, the go-to guy that is always seeking to give out knowledge and wisdom. That's limiting, right? I am nobody, and that's even more exciting thing. I always observe the most successful people, which I believe are those who are still under submission, still under the umbrella of really growing and pursuing growth and pursuing learning. That's what I'm actually about. Okay. With that being said, if you don't know who I am, my name is Willis Aromi. I am a proud father and a husband, somebody who is very much like a family-orientated person. I love the idea of growth and learning. I love the idea of even just reading, which is something that I've never really conquered or never really done consistently before. And also, I'm somebody who's been a part of the financial markets and trading now for just over 4.5 years. We thank God. And love to share this particular segment of the book, this particular book review, The Secrets of the Millionaire Mind. And if you guys are with me, just type some number ones in the chat and we'll just get cracking, put some fire emojis. Just show me that you guys are actually ready to spend some time with me over the next course of the next few 10 to 20 or so minutes. All right, just type some numbers in the chat if you guys are ready, and we'll get straight into today's segment. Let's have a look. Awesome, awesome, awesome. I can see that you guys are absolutely ready. So with that being said, we will get absolutely straight into it. Okay. So first things first, what did we discuss last week? Right. Well, last week we actually discussed wealth files. If you tuned in last week, I'll just touch on it a little bit. When it comes to files, what a file in fact actually is, just to begin with, a file, I'm not going to go through the exact definition, so I do apologize if it differs from what I said last week. But in fact, a file is something that you can store things in it. Look at a digital file, for instance. When you have a digital file, you can have images, you can have videos, you can even have executable files, you can have audios as well. And I think the biggest key that I shared last week was the fact that out of all of these type of files, you can actually have a zip folder or a compressed file, which you can actually put everything that you have mentioned into that existing zip folder. And I also shared that you can actually compress that folder, you can expand it, you can unzip it, you can cleanse it, you can remove some things, you can actually add some things, you can even edit some things within that particular file. Why is that important and why is that necessary when it comes to discussing the mind? Well, I believe it's definitely important. Why? Because we have built up such a history of things, can either be very good, can be bad, can be very neutral, but things that don't necessarily need to live there, right? And oftentimes when these things live there, sometimes we deny it, but in fact, whether we choose to deny it or accept it, these things actually still exist in our minds, be it a trauma, be it a wonderful experience, be it something that somebody said to you positively or negatively, even if it's an experience that you experienced something whilst being abroad on holiday, and it was something that you just have a television advert or you go on YouTube, you see an advert, and that triggers a memory in your mind, such as like a video format of the experience that you had some while ago, some time ago, right? Well, when it comes to files, how does it work? I'm going to explain this one more time, although I explained it last week. Wealth files is very important because it talks more about the internal blueprint or the mental programming around wealth and money. Okay. So the money blueprint, in fact, is more to do with the root causes. Okay. The subconscious beliefs about money. Okay. Or some people will say things like money is the root of all evil. Or, you know what, I can't afford it. That's something often that you would hear maybe your parents saying very often or all the time. And growing up into adulthood, you often say these things without even knowing that actually it was not you that birthed that. It was actually your mum, or your father, or your brother, or something back in the day, someone back in the day that continued to have those sorts of thoughts and ideas that continue to basically become generational. So therefore, wealth file, it focuses more on the patterns and the attitudes and the behaviors around money or decision making. In fact, I know we're talking about money, but this can have so much of an effect on other areas of our lives as well. Okay. So let's just say, for instance, somebody was to be doing some form of public speaking. It doesn't mean that they're a public speaker, but let's just say they were supposed to go up on stage as part of a community event, right, in front of their community, their estate, whatever the case is. It can even be at work. They might have some trauma from that, or they might not be confident to do such a thing. Why? Because they have already told themselves, no, I can't do it. I don't like speaking in front of people. It makes me feel a type of way. It makes me feel uncomfortable. Though these feelings exist even in the most successful and most professional speakers around the world. The difference is one person is a professional speaker. They have those feelings. They exist. But what do they actually say? I'm not feeling in my body, in my mind, I'm very confident. I'm going to go up and say, they might feel these things and then later on discuss that, wow, I was sweating, I was nervous, but you'll never know until you speak to them. All right. And then you have the person who just decides that they're going to speak to it. In fact, they haven't even decided that I will speak negatively. It happens, it flows, right? So it talks about the patterns and the attitudes that basically happen just like that without making much of an effort, if that makes sense. So this is the wealth files. So we are now talking about the different wealth files. We covered the wealth file number 1 last week. We're going to go into wealth file number 2 and number 3. Remember, there are 17 wealth files when it comes to this particular book, The Secrets of the Millionaire Mind. So we're going to go piece by piece. We might do sometimes 3 or 4. We might do 1 because I want to stick to focus on one particular area for a certain period of time. Okay. But today, the most important thing I want to do is this. I want to speak to the person who truly, truly wants a change. Okay. The person who truly wants change within themselves. That's the person I'm going to be speaking to today. If at the end of this particular segment that somebody walks away, just one person, and it changes their perspective, even if you're brand new, I feel like, you know, God willing, that I would have done my job. Okay. But wealth file number 2. Rich people believe that, you know, rich people believe they play the game to win. Okay. So in fact, they play the game to actually win. That is their mentality. That's what they've already told themselves. That's predetermined. That's predestined. Right. Whereas poor people, they believe the money game is for them not to lose. So one person has said, I want to win. Let's talk about trading. One person has said, you know what? I'm playing this game to make profits. I'm playing this game because I know that this is a great system that would allow me to generate or multiply my income so that it can flow into other areas and other businesses. Okay. That's their mentality. That's their mindset. Then ideas will flow through that would allow them to basically become effective in that area. And then another person, a poor person, will say something like, you know what? I want to trade because I don't want to be in a financial difficulties. I don't want to be in such financial hardship. I want to trade because I don't want to work anymore, right? I don't want to work. I don't want to be a part of this rat race. That's why I want to trade. That's why I want financial freedom. I want to get into property because I heard that there's residual income, there's passive income, and I'd prefer that because I don't want to work. Now, you might think that these two statements, they're basically the same thing, just in two different formats or two different perspectives. But in fact, it's more of a deception because they're actually very, very different. They're very different. Why? Because we're talking about the word focus, where one person focuses on the opportunity and the other person focuses more on the struggle or what they don't want. But the issue is the mind doesn't know the difference. They don't know the difference. They absolutely don't. They don't know the difference. I'm going to give you an example that can shed some light on this. Okay. Let's just say that one person said, execute. And then another person said the word execute. That particular word means two different things to two different people. It might mean the same thing, but it means different things to different people. Let's just say one person said the word execute. They might be in a situation whereby they are in the front of a trading screen and all they need to do is press buy or sell to execute the trade. All right. I don't want to get too graphic here, but let's just say somebody was in such a major situation, right? And in that particular situation, the word execute was used, but that word is now being used in a completely different context. The word execute in that context might mean something very tragic. Somebody is saying to somebody or giving an order and says execute. Can you see how the word is the same, but it might mean something very different? And the same thing happens in our minds. What we're often doing is we think that we're saying the same thing, but we're actually not. We're giving orders to our mind to think a certain thing, right? But we think because we're saying the word, it means the same thing. Hopefully you guys are catching, because saying that I don't want to lose and saying that I want to win, for somebody, it might mean like it's exactly the same thing, but it's not. Whereas one person will focus, I want to win, I'm going to win, I'm committed to winning. Their mind is now going to generate thoughts, ideas. They're going to get to a place of discipline where they're now saying, okay, well, if I need to win, what are the things that I need to implement, that I need to change in my life in order to win, in order to become consistent? Okay. Do I need to wake up earlier? Do I need to be committed to what I see? Do I need to protect my eye gates, my ears? Okay. Do I need to control the words that I say, the things that I speak? Do I need to control the associations that I have? Do I need to construct my life in such a way where it's almost impossible for me not to grow? Hope you guys are following me. Okay. So in other words, your thoughts construct your life in comparison to the person who has said, I don't want to lose. Right? The person has now thought the word lose. Now the brain is now saying you don't want to lose, but the brain might have just caught lose because you now know what losing looks like. But because you don't want that, the only thought that's being maintained is losing, the losing part. You don't want something. You don't want to lose. So we often think we're saying the same thing, but we're actually saying different things. Okay. So remember that the thoughts that you have, they actually construct your life. Let's just use gym as an example. When you go to the gym, or if somebody's desiring to go to the gym consistently, you already know you have to have certain infrastructures in your life. Let's just say you're doing a 100-day challenge. How do you consistently keep up with going to the gym every single day for 100 days straight? Well, you can't just roll out of bed anyhow at any time. You can't just say, I'm just going to check in at the gym and run on the treadmill, and that's all I'm going to do. Maybe that's your goal. Great. But what is the plan of action? I want to go to the gym to lose a couple of pounds. How I'm going to do that is by doing X, Y, and Z. Do you have that sort of infrastructure in place? That's the question. Here's the truth. Once you're aware of the thoughts that you think, you can actually decide the direction that you want to steer it. Just like in a car, you have destination A and you also have destination B. Okay. Now, if you don't like destination A and you have the choice between A and B, go to destination B. It sounds so simple, but oftentimes in our minds, we're actually training our brain to think things that goes to destination A instead of destination B. It's like we're driving towards destination A and we're cussing, as if somebody forced and pulled your ear to do it. You know what? I've been to this particular place before, this beach, and I heard that there's loads of sand, there's loads of rocks, there's loads of crabs. I didn't like it. You've got a beach over here, which is nice, great place, beautiful views, great scenery. And you've got another place which looks similar, but it's more like a counterfeit, because when you go there, there's all sorts of things. You have a choice. Your choice is to now go to the place where you're going to have a wonderful time and a place that you're going to remember for a lifetime. But you're basically steering yourself to go to destination A, and you truly don't want to go to destination A, but you're still going there. It's exactly the same as the mind. You're telling yourself you don't want something rather than actually focusing on what you actually desire to do, to experience, and to have. Okay? So therefore, it's your responsibility to choose the thoughts that you think on a regular basis, each and every single day. What you focus on, it grows. It absolutely grows. It expands. But because we don't often talk about the mind, we feel like, oh yeah, you know what? I want success. I want to be somebody who's consistently earning multiple six figures in trading. I want to be able to cover my expenses through trading. And then somebody else says, I don't want to be broke. I don't want to be bankrupt. I don't want to be in debt. I need to get out of debt. Okay, what happens when you get out of debt? What next? Are you going to still trade? Are you going to leave that trading thing? That thing that works so well for you. You don't have any other goals apart from getting out of debt. Is that where it stops? Let me remind you one more time. What you focus on will actually grow. So therefore, I'm saying to you, it's important to follow, to focus on the right things. Because in fact, if something was to grow, what's the point of just thinking negatively? Because that thing will continue to grow until you get to a point where you're so subconsciously speaking negative things, you don't even know it. Hope you guys are still with me. So then well file number 3, I think is probably more important. Every single well file, I think, is equally important. But what I'm about to discuss with you, I think I just wanted to shed some light on it as well, right? But rich people are committed to being rich, whereas poor people, they want to be rich. I'll say that one more time. Rich people are committed to being rich, whereas poor people, they believe they want to be rich. Just like the person that basically says, or let's just say I was to ask a person a question. I was to ask, I don't know, Stanley or David, who's on the call on this session today. David, do you want to be rich? And the person says, of course. Why wouldn't anybody want to be rich? Why wouldn't anybody want to have the success that this person, this so-and-so person has. That's the dream. That's the goal. Perfect. Great. Then you look at their life. You look at the things that they are saying, right? The book even perfectly outlines it and describes it. When you ask a person what they want or if they want to be rich, they look at you funny and they said, well, of course I want to be. That's why I'm here, right? But then on the contrary side, they're like, you know what? Yeah, sometimes it's a bit complicated. Sometimes when you're rich and people that are incredibly wealthy, they have no time. So money is not everything. Or sometimes the money that people desire, they get to a place where they become super arrogant, but I want to be in a place where I'm humble. They're basically, their attention and their focus is on the wrong things. But even from an illegal perspective, oftentimes the people that attract or they want a type of success and they do it in such an illegal way, guess what's so fascinating about them? They're very driven. They are incredibly driven to the point where they're so focused on that goal that they want, right? They're so focused on that goal that they want that they will do anything to get what they want. They have such a driven mindset. It's funny because I often, every now and then, I speak to my wife about this, and she always tells me the same thing. She says, sometimes when people do, like, I'll give you an example. Sometimes they do a robbery or they do fraud, right? A lot of the people that do this, I'll give you even better. Some people that do cyber attacks, right? They must have to be very, very, very intelligent, very computer smart, and a lot of experience when it comes to IT and data and all that kind of stuff to be able to do what they do, right? But the issue is, why don't they just utilize the same intelligence to do something good, right? What does that basically say? It means that whether good or bad, they're very driven, they're very focused. They have the mentality that this thing that I'm trying to go after, I'm very dedicated and committed to doing it by any means necessary. We basically have to adopt a similar mentality and attitude with the things that we desire as well. Does it mean that we need to become arrogant? No, it doesn't. Although that's not what we focus on. It doesn't mean that we need to get to a place where we must be arrogant in order to become successful. No, that's not what we're saying. It doesn't mean that I now need to be successful because most millionaires, they don't have time. They work 11 hours a day and they don't see their family. It doesn't have to be the case. You can construct and design the life that you choose, the way you want it. Okay. But oftentimes, because we haven't arrived at that particular place, we focus on all of the wrong things rather than focusing on, this is the goal. I'm going to get there. I've got a plan. I understand that certain things will go wrong here and there, but I am, number one keyword, committed. I am committed to following the rules, to following the plan, to following that trading plan, regardless of if the price is going up or price is going down, according or not according to what my perspective was. Hope you guys are following me so far. Okay. Then I wanted to talk to you about mixed messages. I think this is fascinating. I find this really, really interesting. Not mixed messages in the way that you might be seeing it now, but what we're doing to our minds is we're actually speaking mixed messages. We ourselves get frustrated and confused at all of the things that we are actually telling ourselves. In fact, all of the things that we speak that leaves from our thoughts to our heart through our mouths, all of the things that leaves, even our thoughts, just thinking, our perspective, the images that we see it in different perspectives. This can vary and it can change from people to people. Okay. So one person might say, I can do this, or I can't do this. Another person says, I believe in myself and my abilities. Another person might say, this will never work. Rather than somebody saying, I believe in myself and my abilities. Another person may even come around and said, this is not good enough, or I'm not good enough. No one believes in me. Okay. I don't deserve success. I don't deserve this particular trade. Somebody might say, you know what? It's true. I was meant to be taken out of this, rather than saying, you know what? I'm glad that I got taken out of it. That's one loss. And now, God willing, I can get a win on my next trade, or so on and so forth. The point is, words carry power. But what we fail to understand is that when we're speaking things and when we are thinking things, we're basically sending mixed signals. It's almost as if we're telling somebody, or we're telling ourselves, You want to go somewhere, okay, then you change direction. Then once you change direction, you go to another direction. And we actually think that is normal. We think it's normal. That's the worst part. We think it's normal. In fact, I'll take that back. We don't actually think it's normal, but because it's so subconscious, it just kind of happens. We don't often take the time to think, you know what? I'm actually sending mixed messages. I want one thing, but I'm creating another with my speech. I want one thing, but my thoughts are being guided by the wrong motivations. Okay? The question I have for you is, do you actually truly know what you want? It always starts with what you actually want. What is it that you actually want? What is it that you want from trading? What is it that you want from success? Is it the fact that you don't want to be broke? That's why you want money. That's why you want success. Is it the fact that you actually want to be able to impact other people? Impact doesn't have to be monetary. Impact can be in so many different various ways. Is it the fact that you want to be associated with certain individuals of high regard? What is the reason or the real reason for what you want to do and why you want to do it in the first place? And then the follow-up question is, are you even committed the way that you should be committed? Because here's the thing, when you send mixed messages, what we fail to understand is that, let's look at ourselves for a minute. Let's just say you were looking in the mirror. Would you ever tell yourself that you are confused? Would you tell yourself that you are not a person that is trustworthy? You're a person full of mistrust. Would you ever be somebody to tell yourself that I am a poor decision maker? I'm a person that functions and operates in poor decision making, in reduced productivity. I don't have any respect for myself. This might sound a little bit harsh whilst I'm saying all of these things, but the reality is this has a massive impact on the way we do things and the way that we function. Why? Because we don't take a step back to think, what are the thoughts that we actually think on a normal, regular basis? Whilst rich people, they're already focused. They're focused. They've decided, this is what I'm going to do. And this is the direction. This is the focus. I'm not seeing this as an obstacle. I'm seeing this, this is a major challenge that we can overcome. I'm seeing this more as teething issues. If you're somebody who owns and runs a company, a tech startup, believe me, I worked for a few companies whereby what they present online and what they sell working in the background is a completely different scenario, right? But what looks impossible, they come up with workarounds and solutions in order for it to work later on down the line. That's the solution-minded individual. I've been exposed to it. That's how I know. Okay? But all of these words that I've shared, confusion, mistrust, frustration, poor decision-making, this is basically a result, whether we choose to like it or not. These are results of the ways that we function based on not deciding how we choose to think. So you need to basically choose your thoughts very wisely. Now, it's all great me being here and saying, Willis told me that I need to fix my thoughts and stop the way I think. Yeah, of course, it's great. We don't have to have this call. You need to fix yourself up and go, right? But I also understand I'm a human being myself. I also understand that we are all human beings. We are all subject to growth. We are all subject to emotions, emotional impacts. How we do things can also, a lot of it, be governed by our emotions. It stems from something. It doesn't just happen and I'm negative. No, it happened because of something, right? So as I'm sharing this with you, I'm also saying this back to myself. I'm reminding myself of the person that I need to be on a consistent basis to be committed to the things that I'm trying to achieve as well. Okay, here's a wealth principle from the book. If you're not fully and totally and truly committed in creating wealth, the chances are you're not going to create wealth. You're not going to do it. Now, here's the other thing. Being fully committed does not need to look like you are a madman or a mad woman. That's not what I'm saying. Okay? But here's something that you can try out. Start by committing to one thing and then adding another thing. Once you committed to those two things, add another thing. Now, probably the only thing that you probably wouldn't want to do is commit to 10 to 15 to 20 things, unless you're Superman or Superwoman. Great, you can do that. Some people are probably better than I am, certainly better than I am, and some better than others. What I'm saying here is now get the accountability that's necessary, get the help. Build quality relationships that would allow you to delegate on even other people to hold you accountable of certain things. Have certain things in your life, infrastructures. As corny and as simple or simplified as it may sound, some people might see it as insignificant, but it does help. Okay? But be fully and totally committed, or be fully, totally, and truly committed to what it is that you're trying to achieve. But if you don't do it, the chances are what you desire to have. Remember the principle from the other page. Some people think that they want to be rich. They think that they want to be rich. So they'll say things like, of course I want to be rich. Well, okay, what are their ideas like? What, in fact, are they looking to do within the next 6 months? And they couldn't give you a timeline of the things that they're going to be working on. It doesn't need to be a business plan, but they couldn't even tell you on the things that I'm working on, the things that I'm reading, the things that I'm looking to discuss, or even the fact that this is the thing that I even need help with. If they don't speak like that, then they're probably not going to be committed. Okay? It's hard to focus if your mind is not fully committed. That's the reality of things. Hopefully that makes sense to you. I remember one of my goals, I think within the last 2 years, I'm going to use another gym example, apologies, but I wanted to look a certain way. I wanted to look shredded. I wanted to look thick, right? And although I said that I was going to do something every single day, which I did commit to after a certain time, I did have accountability, but I didn't seek the right counsel for the diet. The diet side was lacking and it was missing. Okay. So I wasn't fully and totally committed in that particular sense. Okay. But the goal here is, if you want a change, if you actually genuinely want a change, be fully committed. Make that decision in your mind that I'm going to be fully committed to this particular trading plan, for instance. If your trading plan says I'd only trade for 1 hour, 1 minute past that hour, don't place any other trades, because even if you win, you still broken your rules. That's the level of commitment that you need. That's the level of commitment that you need. You need to be so committed, hyperly committed, to the point where you follow your rules exactly as it is written, which is another thing. Write them down. Because the more you procrastinate to write them down, if you don't write them down, if you don't see it, if you don't open up your book, or if you don't have a wallpaper or a poster that shows you, this is what I need to do, the chances are you're not going to be committed. I'm telling you for free. I've done it myself, where I've decided, because I know it, I don't need to write it down. And so therefore, I'm still going to be committed. I'm still committed, but I don't need to write it down. Because I don't do those things, something ends up often happening. Something changes in my mind. You know what? Just this once is fine. I'll just take this setup. I'll just take this signal. Right? That's often what happens. Look at, for instance, I know I kind of bounce in two different topics, but when people take, for instance, multiple different signals, one person is taking gold, one person is taking silver, another person is trading NAS 100, one is trading US 30. Right? You're part of a group. Now, again, there's nothing wrong with a signal provider or a particular group. The issue is, now, if you're the individual capturing those different ideas and setups, what's going to end up happening is you're going to have mixed results. You're going to have a lot of inconsistencies. Your bias is going to be based on, this person has been consistent with a 90% win rate. And you don't even know that 90% win rate is so subjective to your trading account and the stunting of your growth, of the goals that you're trying to achieve as well. Mixed signals. So be totally and fully committed to what it is that you're trying to achieve. Okay. And with that being said, the last thing I wanted to share with you is the commitment for the week. Okay. I was taking a step back and I was thinking about this, and I thought, okay, what is the best way to be committed? What's one way to be committed in terms of, from a positive and a negative thing, way of thinking? Okay, in your book or in a book, on your whiteboard, anything, you decided to do it. The most important thing, you must take action. You don't have to be on this particular segment and take action. You cannot take action. That's fine. But if you are committed this week, here's what I want you to do. Okay. Make sure you write down on one column the triggered situation, on another column the negative thoughts or the statement, and another column the positive, the possible positive or the neutral reframe. Okay. Why I want you to do this is very simple, because, for instance, a triggered situation might mean somebody shouted at you, or you have, just before you go into a meeting, how you feel in that particular instance, the things that you say to yourself, the things that even come up, the ideas that are generated because of that particular feeling, right? So write these things down. Now, maybe you might not necessarily do it in the moment, but you might do it after the fact. You might do it, let's just say, every single major life event or instance. I'm going to write this thing down. This is what happened today. I was traveling in the car today, and my reasons for being late was because this person cut me up in the road and we had an argument, and that really made me think negatively, right? It can be anything, but do it as often as possible, as much as you can, right? And then write down that negative thought, that thought that was able to trigger that particular emotion. And then at the end, the reframe or the possible positive, write down, in this situation or in this scenario, maybe so-and-so happened to have had a bad day. Maybe so-and-so doesn't know how to drive. This might be a little bit of music, but maybe they just don't know how to drive correctly, right? It can be anything. But the idea is to change that negative thought into a positive thought, okay? So, guys, with that being said, I just wanted to thank you, each and every single person, for tuning in, for spending some time with me to go through the book summary of The Secrets of the Millionaire Mind. As you already know, there are many, many wealth files that are attached to this particular book. I say this because I sound quite biased each and every single time, because I said that on the last book, on the psychology of money. That is such a great, life-changing book. This book is also the best as well, because of the perspective that it shares. But what's the most interesting thing about what we're doing here is that we're not just deciding because we just need a segment to just cover and to kill some time and to just say, oh, guys, we need to read to become better. I think it's much deeper than that. A reminder to each and every single person that we are becoming creatures of habits, because the habits that we create in our life, that's what people are going to look at. That's what people are going to look at to say that Emmanuel is consistent. There's something about Emmanuel that tells me that he is consistent, that he is trustworthy, that this is a person that is competent, because I've seen the way he does a certain thing. Does that make sense? So that's one of the reasons, beside other reasons, why we do this particular book segment. But I'd just like to thank you all once again for tuning in to this live segment. It's been a pleasure. Okay. And I just want to say thank you very much again. I probably said that twice or three times again, but yes, I'll say it one more time. Thank you so much for tuning in to today's session for the book summary and the book review of The Secrets of the Millionaire Mind. And I will now hand it over to the team, and I will see you guys very, very soon. My name is Willis Oromi. God bless you, and peace out. Love.
It's a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. Fix your mind, fix your trading. It's a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. Fix your mind, fix your trading. It's a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. Fix your mind, fix your trading. It's a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. Fix your mind, fix your trading. It's a mind game. You heard me. Trading is a mind game. Fix your mind.
Hi everyone, I am back again with another announcement. But before I get into the announcement, I just want to shout out everyone that is currently here right now. I do see someone putting TP family rise up together. Yes. And first time with TP family live from Forex clinic. Hello, welcome. Let me see. We have Nigeria, India, Ghana, South Sudan, Lesotho, hi, Dubai, Iran, hi. Hello, hi everyone. Thank you so much for tuning in. And I just want to also thank Willis for the amazing session that he just gave, because truly what you focus on is what grows within your life. So I don't want to be here for long. I just want to quickly say that this space is built for healing, clarity, and truth. And if anyone in the comments or live chat is trolling or spamming or distracting others with their comment, I will personally remove you from the live session and you wouldn't be able to participate any longer. And I just want everyone to respect each other, respect the atmosphere that we have built here, and you wouldn't be kicked out. Okay, it's not anything personal, it's just our rules and regulations that we have set here, the terms and conditions. So please respect it and you wouldn't be kicked out. Thank you so much, and thank you. Stay tuned for more.
It's a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. Fix your mind, fix your trading. It's a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. Fix your mind, fix your trading. It's a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. Fix your mind, fix your trading. It's a mind game. You heard me. Trading is a mind.
Well, hello everybody. Hello. Can you hear me? If you can hear me, just give me some ones in the session. Let me just know that you can hear me so that we can be able to move on. Some ones in the session will be good from anyone. Great. Thank you so much, Nelson. Actually, Nelson, thank you so much. Every single week when I say give me some ones, you are the first person who actually types in the one. It's really interesting. I take notice of that. All right, so let me just give a few shout outs. I see Prophet Mind. You're welcome. I see Mandal. I see Emmanuel Baba. I see Benjamin, Rose Jackson, Black, Ron, Derek. Did I get that name right? Emmanuel Ose, I see you. Jeremy, I see you. Dalton, I see you. David, I see you. And then Barry, I see you. And so many others who are on the session right now. Thank you so much for joining the TP Masterclass. If you have been on every single Saturday or most of the Saturdays, you know that we are always here to serve you right on spot. This is a journey that we have decided to take, and we are glad that you are moving along with us, right? I'm really glad that you're moving along with us. So thank you. It's another Saturday, and today is no different. I am coming on here to give you something that I have cooked up. We started a beginner session, Forex beginner session, actually. I started by talking about the financial market. I started by talking about the several financial markets that we have, what makes the financial markets different from each other, what sets them apart from each other. And then I stated that I have actually been trading the Forex market for the past 8 years. And because of that, I have gathered enough wisdom, knowledge, and understanding to be able to deliver to you guys. And then it's not just about that, but if you realize that, or if you have been on this live session, you realize that it's not just about, being on here and delivering or, trying to give you anything, but I've really worked hard on what I actually deliver. And whenever I'm coming on here, I spend a lot of time to be able to develop a slide that will be able to help each and every one of you. So you must know that I don't take this lightly at all, right? Thank you so much for being on the session once again. So let's get in on that. So today is no different. We are going to continue with the series that we have already been doing. Now, the interesting thing is, when I started, I thought that it was going to help only beginners. But then a pro trader actually contacted me and said, Kevin, do you know that most of us came into the market and then we actually started by looking out for a strategy? So we did not spend too much time on building the foundational knowledge of how, the market actually works. But so all we did was understand candlesticks and then get a strategy, and we are trading. And that is why some of us continuously have certain kind of problems on the market. But now going all the way back and then starting from the root, it's actually helping. Then I realized that no, this is not just for beginners. Actually, pro traders out there who might not have had the chance or the luxury of being able to go through foundational level of trading can have the chance to be on here, right? So today, just like I do every time, I prepared a special slide, and I'm going to share that special slide with every single one of you on here. So if my team is up, we can bring up that. Okay, so guys, follow me on this. It's going to be interesting. So we have gone through, a lot, and it's really interesting. I'm smiling because, it's really, really interesting, right? I'm smiling because it's really interesting. And we have gone through a lot, and then we have been able to get here. Market terminologies. Now, this actually blows my mind, but let me take it from this particular perspective. When I was going into senior high school, I got science, right? I got science. And I delayed about 4 days before getting to school, senior high school, right? And so when I got to school, they had already started some of the topics or some of the subjects. One of the subjects that comes along with science is chemistry. And the day that I entered the school, I think it was chemistry that they were actually doing. It had all this CH and then, like this dash and then this combination of stuff, right? I started in the class watching the black, board. We had a blackboard. In Ghana, we have a blackboard. I don't know about the country that you're from, but here, most of the senior high schools, have blackboards. Maybe now they have, gone up a little bit. But previously, from that 2006, when I entered into senior high school, we were using blackboards and then a chalk, right? So this teacher was out there and then listing all of this CH and then explaining things that clearly you could see the rest of the class or most of the class actually guess what he's saying. But I was lost. I didn't understand anything, nothing. There were a few terminologies here and there that, I could basically map out because in junior high school, we basically did those things. But there are things that he was mentioning that honestly, I had no idea. And you know what I did? I just left my bag, asked for permission that I was going to the urinal, and I bolted out of the class. I never entered science class again, right? But what is the problem in this? The problem in there is that if I had stayed a little, more, I might have had someone who could have explained things better to me. Or probably that day entering that class, he was trying to tell us what we would be actually getting into, subsequently. Going ahead in the sessions. And I thought that probably they had already done certain sessions and then, me coming or me getting here was me missing out on the preliminary stage of that particular session, right? And so I did the right thing. I exited that place and then I found myself in general art class. I remember that, we had to go through a whole process in changing, from science to general arts. But basically, that is just to tell you that sometimes you can enter into a space and it is very simple if you have someone to explain certain things to you in a certain way. But because you do not meet someone like that, or you do not come across an individual like that, you realize that some of these terminologies become boring, become too difficult to understand. And then sometimes it ends up making you detest that particular area that you find yourself in. You do not necessarily want to go into that area again, even though you came in with an interest. That interest finally dies out. And that is why we are here to talk about what? Market terminology. So when you come into the market, there are a lot of terminologies that you are going to be, getting. Some of these terminologies, asset, you hear offer, you hear, it was in, the Accra Technical University that I heard about invitation to trade. And then I actually delved into that particular area, right? Because I was doing business law. And it was a very, very interesting area and then all. But, it all depended on who would explain certain things to me as an individual coming into that space was fresh. So let's get in here and then let's talk about this, right? So market terms. what are some of the market terms that we'll be looking out for today? We will be looking at something like long and short, which basically is also, bull and bear. Then we'll be looking at the spread. We'll be looking at the leverage. We'll be looking at margin, balance, like equity, free margin. Some of these things, we might not necessarily be able to treat them all today, right? But I'll try as much as possible to delve deeper and then treat what I could today. And then we would schedule the rest for the next week, right? I hope it's great. Now, stop loss. Talk about take profits on the market, lot size on the market, pip and pipette, slippages on the market, bid and ask price on the market, range, and then finally, we'll talk about trend. Now, there are other terminologies that I've not even mentioned here, but since we are talking about beginner stage, I thought of which, technologies that a beginner actually come across from time to time. Then later on, when we get to intermediary, we'll now be talking about, which terminologies do intermediary individuals, come across from time to time, like mitigation, order blocks, and then I have a lot of people constantly asking me about some of these things, right? Now let's get in there. This is the terminology of option. That is what I call it, a terminology of option. Long, short, bull, and bear. Basically, you have two opinions about a tradable derivative, right? Either it's going to go towards the upside or towards the downside. Either it's going to increase in value or decrease in value. These are the two opinions that an individual can have about a tradable derivative. Now, a trend is a particular direction that something has been, something is, unraveling in for a period of time. So that's what a trend is. So we can have a bullish trend and we can have a bearish trend. A bullish trend, basically, I've mentioned it before, at the start of the beginner session, but I'll mention it again. When we set or we have price moving towards the upside. And then a bearish trend, basically when we find price coming towards the downside. So bullish is if the price of a market instrument is going towards the upside during a specific period of time. Now, it is referred to as a bull market. If we have price moving towards the upside, over a period of time, it's referred to as a bull market. So we could say that, in this particular month, market was bullish. In this particular month, we had a bull market. In this particular week, we had a bull market. For instance, on gold, this particular week was actually a very good bull market. How do you understand? Then when we talk about bearish, we are talking about price moving towards the downside or the asset, the value of that particular asset decreasing. So we could say that, subsequent times before, price started rallying towards the upside, we had, a bear market. Bear market basically means what? We are having a drop or a decline in the value of the asset that we are looking out for at a particular point in time, right? Now, if you as a trader come into the market and you are buying, that is another terminology that we can bring in is what? Long. So I'm going long on GBP USD means that I'm buying GBP USD, right? Now, when you go long on an asset, what you're basically doing is you are buying into that asset. It means that you will only benefit if the price of that particular asset or the value of that particular asset increases. And then if you sell an asset, your position will be what? Short. So you hear people say, I'm going short on GBP USD. It means they are selling GBP USD. It's as simple as that. When you go short on a particular pair, what you are saying is you are selling. It means that you want to see the value of that particular asset that you have chosen to trade decrease. And it is only going to be beneficial to you if that asset actually decreases in value. Now, let's move on. Buy when you expect price to go up. So when you are going to buy, just like I explained, in the previous slide, when you are going to buy in the market, it means that price should have been at a current price level that you are looking forward to it increasing. So for instance, I have 1.1200 around this area. That is the current price level. You have a sentiment that you are looking forward for the value to increase from that 1.1200 and go to 1.1350. You realize that there's an increase. 1.1200 to 1.1350. There's an increase. I'll be understand. So since there's an increase, it means that I'm looking to go long on this particular trade. And if I actually buy into that particular, I would say I've gone long on this particular asset. I'll be understand. And if market rallies towards the upside, then that is a bull market that I've just basically bought into. Now with a chart representation, it will look something like this, whereby we have price coming towards the downside. Then at an area, we have what? Price rallying towards the upside. So every point in time, market is basically showing you something interesting. It's only showing you the decrease in value and the increase in value of the asset that you are trading at a particular point in time. That's what the chart is talking about. It's just like in those days when we were in senior high school that we had to do chart representations, and then, like the teachers could basically tell us to represent our data on a pie chart or represent that data on a bar chart. The same way when he comes into the market, you could represent that data or price movement, whether decrease or increase, on so many data representations. It could be a line chart, it could be a bar chart, it could be candlestick patterns information, and this is what we actually call candlestick pattern, or candlestick formations on the market. So this is a candlestick representation of price movement towards the upside or towards the downside. At a point in time, you realize that it's rallying towards the downside. At another point in time, it's going towards the upside. And basically, it is just showing you that at this point in time, between this time frame, we had price decreasing. And at this particular point, we had price increasing. So you as the trader, you are sitting behind your chart and asking yourself, when is price going to increase? And it is based on clear indications or certain criteria that you are going to either sell or buy on the market. And that's what people call a strategy. So after understanding what exactly the market does, you need to also have a strategy. So everything that I teach here is basically the foundational level of understanding how the market actually works. But after all is said and done, you have to sit behind the chart and say, okay, now that I know everything about this, how exactly am I going to approach the market? How am I going to buy or sell in the market? So when you are buying the market, it means that you expect price to go up, which basically means that you as a trader is supposed to find an entry. Then you will find two main things that we are going to talk about after this area: stop losses and take profit points. So one, you find an entry, which is basically an area in the market where you can be able to jump in, and you need a skill to be able to do that, right? It's all part of a strategy phase. So you need to be able to know where to buy into a particular asset if you are looking to go long. Then you need to set these two main things: take profit and stop loss. I'll talk about them, right? Now let's move on. You sell when you are expecting price to come down. So when price is at 1.1350 and you are looking forward for price to come down, it means that you are looking forward for a decrement in that particular value that I've just mentioned, which is 1.1350. So from 1.1350 down to 1.1200. And if you're looking to sell on this market, basically your position is going to be short, or you are looking to short on this particular market. I'll be getting. And if the market unravels towards the downside, basically a bear market, right? So now a chart representation would be something like this, whereby at a point we are looking for market to plunge towards the downside. And if market plunges towards the downside, it does not necessarily mean that you have made profit until you actually put in a trade before you'll be able to make profit. So you put in a trade, market drops towards the downside. And let me just put this across. There are times when you can clearly see the market is coming towards the downside. You will sell and you will still make a loss on the market. And a lot of people are going to ask why. It's because it's not just about market dropping and you jumping in for it to bring you towards the downside. Sometimes there are areas where, as much as market is dropping towards the downside, you are still going to get what we call a pullback or a retracement. And if you enter the market at an area where you feel like, okay, it's supposed to continue dropping, and that is an area where it's actually going to pull back, it's actually going to go towards the upside first before it's going to actually, satisfy that particular sentiment that you had, which is the drop. Which means, first of all, you are going to see, or you are going to chop that loss before market is actually going to drop towards the downside. It means that you as a trader need what we call a skill to be able to know, even though market is dropping towards the downside, where do I enter the market? I'll be getting. So I illustrated this by saying that, okay, so let's say you have identified how exactly to sell into the market. You saw market do this, and then that was a confirmation for you. So you found out your entry point for selling around this particular price point. Then you set these two main things. Again, stop loss and take profit. Now, what is a stop loss and a take profit? A stop loss and a take profit is basically an order that you give to the broker. So let me just bring this. So stop loss is an order. So an order. Let me put it here. An order, right? It's an order that you are giving to the broker. A take profit is also an order that you are giving to the broker. So what is the difference between the stop loss order and the take profit order? Now, all you are saying is, I always say this to individuals. As a trader who is sitting behind your PC, having your amount of money deposited into your trading account and you are trading, you have total control of what happens with your fund. How much you risk is you. How much you are looking to lose is you. How much you are looking to gain out of a trade that is actually unraveling in profit is you. And that's why sometimes you can have two individuals who get the same trades. One gets out, so early, the other rides the trade all the way to the final, take profit point that he's looking to have. The question is, why are these two individuals having the same trade opportunity on the market, but they were not all able to stay through till where market was able to get to, or that opportunity, they were not able to milk out that particular opportunity on the market? It all depends on the individuals who are actually trading. So stop loss is an order. Now, it is an order that you are giving to the broker. You are telling the broker that I want to buy around this area, right? Once I buy around this area, it means that I'm looking for price to push towards the upside, right? If price goes towards the downside, what do you think would happen? It means I'm making a loss, because my speculation was that market will move towards the upside. And instead of market moving towards the upside per my speculation, after I've put in my trade, market is going towards the downside. It means that I'm seeing a loss. So the stop loss is an order that you give to the broker in order for the broker to close your trade at a particular price point where you the trader feel that trade should be cut off, and whatever amount of money that you have lost within that particular period or that particular area is taken out of your trading account. It means that you can have $1,000 in your trading account, and per the trade you enter, along with the stop loss and the stop loss that you set, and then the lot size, we will talk about lot sizes, that you actually use on the market, you can risk as low as only $5 out of this trading account. Only $5 out of your 1,000. It means when this trade hits stop loss, only $5 is going to be taken out of your $1,000 account. So now the question that someone will have in mind is, then why is it that a lot of people lose all the $1,000 on the market? Right? It is because of those individuals, the kind of risk that they put on their trading account. So an individual can trade an account, $1,000. Someone can trade that $1,000 for 6 months, making losses, making profits, making losses, making profits. Like relatively between that period of 6 months, they would have been able to at least make maybe 20%, 30%, 40%, 50%, even 100%. Someone wakes up one day and the same $1,000, they ended up burning their whole capital in a day, or even in a couple of minutes. It all depends on the trader who is sitting behind the PC. So a stop loss order, I repeat, is an order that is given to the broker by the trader. Now, the trader is speculating that market is going to go their direction. But if market does not go their direction, then they need to have an area where they are going to cut off that loss. So it's a stop loss. So market is going against you and you are stopping the loss. So you have given the broker an order to stop the loss at a particular price point. And that's what basically it is. Right? Now, I use bullish scenario. Let me use bearish scenario now. Now, in the scenario where we are going towards the downside, right, for a sell, it means that you are looking for market to move towards the downside or decrease in value, that particular asset, right, that you have chosen to trade. And unfortunately, market begins to push towards the upside. But you already have your stop loss at a particular area where you know that this particular area where market hits that region, I'm going to only lose $10 out of my trading account. Now, the question is, are you okay losing $10 on the market? Yes. So you as a trader will not necessarily worry too much, or for the want of better words, not necessarily go through too much psychological hurdle for the loss of a $10 as compared to someone who has actually used a risk on the market that probably allows them to be able to lose $700 out of $1,000 account. You get it? So this person who is losing $700 is going to be sweating in their chair or in their seat, probably wanting to close the trade as fast as possible. But you who is losing $10, I told someone, you can actually have $1,000 account, a $500 account, $200, $100 account, place 0.01. Risk maybe 60 pips on a trade, GBP, USD, Euro, USD, and then just leave that trade running and monitor yourself how often you come to open the chart and say, let me take a look at what is happening. Right? Comparing you or juxtaposing you to an individual who has $200, $500, $1,000, who has entered probably a big lot size like one lot. We'll get to lot sizes, right? So you understand, the juxtaposition on here. That individual will be sweating and constantly at the edge of their seats, watching the market, every single tick and every single movement. So I tell people one of the ways to be able to sidestep, not entirely, but like one of the ways to be able to sidestep that psychological hurdle is to do the right thing on the market. And I'm not saying when you do the right thing, it's going to go away. No. But at least you will be able to be in a better position to be able to control it. One of the chief functions of emotion is to realign and reorder already processing priorities on the market. And so you don't want to put yourself in the position where it becomes too much. I'll be understand. Great. So take profit is also an order. Now here lies the case. Here you are actually making profit. So you enter the trade for a buy, you're expecting for price to go up, and price actually goes up. So you have your stop loss intact. That if price is going to go towards or against my speculation, I want you to stop that loss here. And wherever that stop loss is, like the amount of money based on your lot size would be calculated and then taken out of your trading account. But if you are making profits, you can also say, when you get to this particular area, no matter where you are going to, even if you are going to heaven, I want you to take me out here. And whatever profit I've made up to this point, you can bank it. Now, the interesting thing is you can actually calculate your profits, how much you are willing to make. You can actually calculate it and pre-put that order there. So when market gets there, you already know that if market hits this target, I'm going to be making $20. And that $20 will be added to my trading account. So the take profit is also an order that's given to the broker. I hope you're getting somewhere. Right. Okay, let's move on. Now, let's talk about pip and pipette, which is one of the terminologies that you come across in the market. Pip is the unit measure of the change in value, of price of a market asset. So, for instance, if I have this area as my current market position, and I'm looking forward for market to move towards the upside. Now, this movement, you see, I was saying that you can put your stop loss at an area, you can put your take profit at an area where you can be able to calculate and then say, okay, so if I put my stop loss here, I'm going to be losing $5 or $10. If I put my take profit here, I'm going to be making $10 or $20, right? That particular movement from one area to the other is calculated in the market, and that calculation is what we call pip, or that unit measure is what we call a pip, right? So we call a pip calculation. So the unit measure of the change in value, that change in value from one price point to the next, and then to the next, and then to the next, is what we call pip. So you can be able to follow that. And that's how we can be able to, those who have heard it before, you can hear someone say, I'm in 10 pips profit, I'm in 20 pips profit, or I'm currently in 20 pips in a loss. They are able to calculate that particular unit measure, how do you understand, based on the movement of the quotation at every point in time. So there are brokers that quote beyond the usual 4 decimal places. So the interesting thing is we have this 1.3840. If you remember our previous session on market quotations, right? Market quotes, you would remember I stated that usually the quotes come with 4 decimal places. 4 decimal places. And these 4 decimal places, the final one, which is the last one, is where the pip begins. That's where the pip count begins. So if 0 moves from 0 to 1, and we have 1.3841, it's actually what? 1 pip movement. If it goes to 7, that's 7 pips movement. If it gets to 9, that's what? 9 pips movement. Now, if it moves from 9 and goes to the next, which is supposed to be 10, but it goes back to 0, what do you think would have happened? It would have come to 0, but it would have affected this area to change from 4 and come to 5, which means now we have seen what? 10 pips movement on the market. So it would have moved from 3840 to 3850. And that's with the what? Starting from the 4 decimal place. How we get it? So whenever you go onto the chart, GBP USD, it quotes the same thing, 4 decimal places. Euro USD, 4 decimal places. AUD USD, 4 decimal places. You know, like it goes on and on like that. But with the exception of Japanese yen and then the Swiss franc pairs. That one is entirely different, and I'll come to that. So there are some brokers that quote beyond the usual 4 decimal places. When that happens, the 5th decimal place is a mere fraction of a pip. So you have 3840, the same figure as we have here, but there is a 5th decimal place here. Usually when you see this 5th decimal place, it's a mere fraction of a pip. So this is actually not a pip calculation, but a fraction of a pip. If we have 0, 1, 2, 3, 4, 5, all the way to 9, and we move on to 10, then we are going to see 1 pip in the market. Just like I explained the pip calculation on here. Just like how this would actually bring this one into 10 pips if it moves from 4 to 5. Or if it is decreasing, it means that we are going to have 0, then we are going to have 9. So the moment it goes to 9, what do you think will happen to this? It will change to what? 3. It means we have moved what? 1 pip. So we are going to have 3, 9, right? So 3, 9, 3, 8, 3, 7, all the way now. And then now we have what? 3, 0. What do you think has happened? We also have the same 10 pip movement. It's just that when we were talking about the increment, it was 10 pip increase. And then when we are talking about the decrement, it's 10 pips decrease. It's the same calculation, whether it is increasing in value or decreasing in value. The pipette around this area is also the same thing. Moving towards the upside, decreasing towards the downside, it will all affect a pip value. And there are some brokers that actually quote the 5th decimal place. That is why it is a necessity for me to be able to what? Mention the pipette. Now, when it comes to Japanese yen and then the Swiss franc, they have a 2 decimal place quotation. So you can find something like 340 point. You get it? This one we had 1.3840. This one we had 340. Then we have point. Then now we will come to 84. So that the pip starts from this, which is the 2nd decimal place, right? So if we move from 4 and we go to 5, and we go to 5, it means what? 1 pip. We move from 5 and then we go to 6, 2 pip movement. So gradually moving like that, we will finally come and then change this and then come into this, and then we will have maybe 9, right? 9. And basically it affects it like that, going all the way down. So there are some brokers who also, you know, like quote 3 decimal places for the Japanese yen and then the Swiss franc. So the 10th decimal place in all Japanese yen pairs and then the Swiss franc pairs would actually be the pipette in this scenario. How to get it? Would be the pipette in this scenario. All right, so let's move on. I want an eraser. Okay. I think it. Great. Great. So can we move on? All right. If you have any questions at all, you can put it in the area, and then I'm willing to answer some of them once we come back into this area. So now let's move on to the next thing. lot sizing on the market. Now, when it comes to the market, we don't quote, we quote figures, but when you are about to actually place a trade on the market, we don't quote the figure that you're about to, put on that particular trade. That particular figure, that particular amount of money is represented by a unit, of measure. So we say that in Forex, it is commonly traded in what? Specific amounts called lot sizes. Now, a lot is a unit measure of a transaction amount. It means whatever lot size you see represents a certain amount of money in the market. And we should be able to know that amount of money in the market. So it's essential for you to know that amount of money because it will help you whenever you are going into the market to be able to calculate what you are supposed to see or what you want to see. Now, when you place orders on your trading platform, the orders are placed in sizes quoted in lot size and not the currency. So that's why you go onto your platform and sometimes you see 1 lot, 2 lots, 0.5 lot sizes, 0.1 lot size. Now, that is a lot size that is representing a unit amount of money, right? Now, let's get in here. There are 4 main types of lot sizes. We have the standard, the mini, micro, and then the nano lot size, right? Now, let's get in. What makes a standard? What makes a mini? What makes a micro? And what makes a nano? The standard lot size is represented by $100,000. Or $100,000 is represented by 1 unit, which that 1 unit is what we call the standard lot size. Let's move on. So 1 unit is equivalent to $100,000. So the moment you realize that there's what? 1 lot being placed on the market, it means you are actually putting on $100,000 on the market at that particular moment on a trade. You need to understand that. I'll expound it as we go on. Now, this particular 1 lot size, let's take, for instance, that was the only lot size that we are using in the market. You and I will not be able to trade the market. You understand that? Because not everyone has $100,000 in capital to put on the market as a retail trader, right? And use only 1 lot size or be privy to using only 1 lot size. That is why there was that dispensation. That is why there was that breakdown of the standard lot size into smaller units for us to be able to be, on the market or participate in the market. Now, the interesting thing is that when you break that particular lot size of 1 into smaller units, you are going to have something like this. You are going to have something like this. So I want to use the pen. Right? So we have 1 lot size, which is equivalent to 100,000. So put it in mind, 100,000. I'm using my MacBook mouse, so it could be really messy, but pardon me, right? So that is what? Equivalent to 100,000 in dollars. Now, this 100,000, we are going to break it down into smaller units. What it basically means is this is 1. If we are breaking 1 into halves, how are we going to break that? We are going to have 0.5, right? It means that in equivalence, we are basically dividing this 100,000 into 2, which is what? Now going to be 50,000. $50,000. So 0.5 represents what? $50,000. If we are dividing this 0.5 into halves again, we are going to have 0.25. What it basically means is that 0.25 is equivalent to what? Half of the 50,000, which is going to be what? $25,000. $25,000. Now, the interesting thing is, as soon as you touch this 1 and break it down, it no longer becomes a standard lot size. It becomes what? Standard lot size that has been broken into units or smaller units. And those smaller units also have a name. And so that's why we say what? Standard lot size, and we have mini lot size. Mini lot size is any lot size that is between that or below that 1 lot size all the way down to 0.1. So we are having 1, right, all the way below 1, all the way to 0.1. So it means that 0.99 0.99 is a mini lot size. All right. Or what we'll basically say 99 mini lot sizes. I hope you get that. 99 mini lot sizes. How much is 99 mini lot sizes? 0.99. What is 1 mini lot size? 0.1. What is 1 standard lot size? 1 lot. I hope you get it. Then, when we are going further towards the downside, it means that we are breaking this down, this 0.1, down to smaller units again. And that is what will give us a micro lot size. So that micro lot size, it means we are breaking this. So anything that falls below this 0.1 all the way to 0.01. So it means that 0.09 all the way down to 0.01 is a micro lot size. And then it's sitting here, micro lot size, right? Micro lot size. And micro lot size, if this is 100,000 or 1 is equivalent to 100,000, then if we are doing 0.1, it means that we have divided that 100,000 into 10 equal parts. And how much would 10 equal parts of 100,000 give us for 1? That is what? $10,000. It means 0.1 is equivalent to $10,000. And if we break that $10,000 into 10 equal parts, we are going to have $1,000. And that $1,000 is represented by 0.01. You get it? And now, if we are breaking that 0.01, this is really funny. If we are breaking down that 0.01 to smaller lot sizes, we are also going to have 0.001. And that is equivalent to what? Breaking $1,000 into 10 equal parts, and then we have what? $100. And that is how lot sizes are represented in the market. All right. Now, the next thing I'm going to talk about is, because we have talked about pip movement, now every single pip that market moves, based on the lot size that you place, you'll be able to see a certain amount of money either add to your trading account or leave your trading account. And you must put that in mind. So 1 standard lot size per pip, I mean, I'm using it as a standard, as a universal, but we have other assets that do not necessarily go by that rule. There are other assets that fall beneath that $10. There are other assets that go beyond the $10, but I'm using the $10 as a standard. So the basic thing is, have in mind that 1 standard lot size is equivalent to $10 per pip. What it basically means is that, guys, can you hear me? If you can hear me, kindly give me some ones in the chat area, if you can hear me. If you can hear me, give me some ones in the chat area so that we can move on. If you can hear me, give me some ones. All right. Thank you, daughter of the most. All right. So it means we can actually move on. Thank you so much. I really appreciate that. Right. So basically what it means is that if you are taking a look at this, now these are the dispensations: standard lot size, mini lot size, micro lot size, and then the nano lot size. In today's, like trading world, we have actually taken off the nano lot size. Nano lot size does not necessarily exist on so many brokers. A few brokers actually introduced that, but they introduced that in a different trading account. It means that if you really want that trading account, they call that a micro account. If you really want that, you can be able to go in for it, whereby you can be able to place 0.001 on the market, which means 10 times of this is what would be equivalent to 0.1. But the amount of money that you gain or you lose from the trading account, because of that, it discourages a lot of people to even go for that. I hope you understand. We'll move on. All right. Now, I'm going to talk about leverage as well, right? What is leverage? Leverage is simply having an upper hand, right? So the topic of leverage actually directs me to what I call ratio and proportions. You remember those days when we used to talk about ratios and proportions in school. Those who went through that process, right? Ratio and proportion is one of the things that we actually studied in school. And then basically ratios taught us that we are basically juxtaposing or comparing two main things. right? So if I come into this area and I say 1 is to 2, what I'm saying is at this particular moment, I'm comparing this to that. How do you get it? So it means that if I am putting this on stock, I must be seeing this on the other end. That's basically it. This would represent what? That. So in ratio and proportions, or in risk management, we have something we call risk to reward. And then people say, okay, I'm going for 1:2. I'm going for 1:4. What you're basically saying is, whatever I put in on the one as a risk, right? If it is 50 that I put in on this as a risk, and you are seeing, or you are looking for it to 1:4, it means you are looking for it for the multiplication of that one, right, which is the 50, by the 4, which you are seeing here. And that will give you how much? That will give you 200. It means that if I'm going by the ratio of 1:4, it means if I reach $50, I must see 200 before I actually cut that trade short. You get it? So leverage brings me to ratio and proportion. And that is the same thing that the brokers offer us in a different way, right? Now, sorry. Okay. So now let's move on. So what it basically means is that if I come into the market with a certain amount of money, I would be able to use that amount of money that I came into the market with to control a larger sum. And it is all because the broker has given me what we call a leverage, an upper hand. It's simple. And so if we move from here, leverage and lot size, right? Basically, we are talking about the initial margin that a trader has being multiplied by the leverage that they choose on the market to operate on a particular account. So here's where the interesting part comes in. I, as a trader, I have a capital of $100, right? Whilst I'm creating my brokerage account, I come across leverage and I'm confused. What is this leverage? And they have listed so many of them. 1:50, 1:100, 1:150, 1:200. Some brokers go all the way to 1:unlimited, right? Now, the interesting thing is a leverage is actually a help that we are giving to you for you to be able to use a little amount of money to control a larger sum of the market on the market, right? Now, if standard lot size previously, one lot was equivalent to 100,000, and that was the lowest that you could be able to trade until the breakdown came in because of retail traders. So the breakdown actually brought forth that dispensation where we have now 0.1 with respect to lot sizing, right? Then we have 0.01. Then we have what? So let me cut it here. The three main ones. So we have standard, micro, and then what? Macro, and then the standard, mini, and then the micro, right? So this being what? 10,000, 10,000. Then this being what? 1,000, right? So it means that even with the lot sizing, if you're not having $1,000, you cannot place 0.01 on the market unless you have what we call a leverage. And that is the help that the broker gives us. So you can have $500 in your trading account. If your leverage is 1:1, you can't place a trade on the market because the lowest lot size allows you to be able to place 0.01. And that 0.01 is represented as $1,000. So it means that your amount of money that you have in your trading account, which is your margin, it's not up to the margin that you need or is required to be able to place a 0.01. And that is why we use or we need leverage on the market. But too much of leverage is also bad. So we say leverage is a two-edged sword. As much as it can cut for you, it can also cut you. And so we need to be able to what? We need to be able to see to that as well. All right. So we are just going to finish this session right now. So don't worry at all. Right. So based on that,
what I want you to see is capital, which is $100, multiplied by the leverage I choose on the market. So let's say I choose a leverage of 1:200. That 1:200 would now multiply the capital, my initial margin, which is the $100, and that is going to now equate and give me my trading power on the market, being $20,000. And so now when we go back to what we call the lot sizing, how much is $20,000? How much is $20,000? $20,000 is twice of a mini lot size, which is 0.2. So it means that me on the market having $100, I am privy to 0.2 as a lot size that I can use on that trading account. Another final example that I'll come in with, right? If two individuals have $100 each on the market, what it basically means is that we have initial margin of what? 100. Without any leverage, we cannot trade because that $100 is not up to the required amount of money needed for a trader to place even 0.01. You need $1,000. So we need leverage to be able to magnify this particular capital for us to be able to have that access on the market. So what it basically means is if these two individuals choose different leverage on the market, 1:100, 1:1,000, these two participants, right? One chooses 1:100, one chooses 1:1,000. What it means is the first one who chose 1:100 is now going to have a 10,000 capital to be able to use on the market, which is now equivalent to what? 0.1. And the second one who chose 1:1,000 will have a well of capital of what? 100,000, means that they can use one lot. So these two individuals all having $100 on their trading account, one is able to use only up to 0.1. The other will be able to use one lot on the market. How is it a double-edged sword? If you are entering the market with one lot size on a $100 account, you know that per pip movement is what? Either adding $10 or taking $10. So as much as it can increase your money quickly, it can also take away your money as fast as possible. And you need to have this at the back of your mind. So these two participants all have what? Different power that they can be able to what? Use on the market, or they are able to what? Access on the market. And it's all based on what? All based on the leverage that they choose in the market. Time will not permit us to be able to delve deeper and deeper into the subject of terms and market terminologies, but we are definitely going to end here. And then God willing, next week we are going to come back and we will be able to do much more. If there are any questions that you have, I'm just going to give 2 minutes, just 2 minutes. I want to see those questions in there. My team is going to pen those questions down, and when we get the opportunity, we'll be able to answer them. Or within that 2 minutes, I'll just take that and then what? And then be able to answer them. So quickly. Let me see your questions. All right. So my team, you can actually take the slide off so you can, make me bigger on the chat, and then let's see some of the questions. Any question at all up to this point? Any question at all? Ooh, Irene says I've missed out. Irene, interestingly, you have not missed out at all. This is actually a recorded session. It's going to go on the Clifford Cheqona YouTube page, and so you can actually come back and rewatch the whole session all over again. So you have not missed out at all. Just if you are rewatching the session, make sure if you have any question, you can put it in the chat area. And once we see it, we'll be able to answer it on our next session as well. All right, guys. So that is all for me for today. But definitely, there's more coming your way. We are now delving into the bigger aspect of it, the more technical parts of it, and it is going to get much more interesting. I bet you on that. For now, stay safe, each one of you, and pray into the coming week. Definitely. Sign out. My name is Kamal Trade.
It's a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. Fix your mind, fix your trading. It's a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. Fix your mind, fix your trading.
hope you guys enjoyed the session. Today we had to intentionally take care of these terminologies, and I think we can drop some number ones in the chat for my brother Kema. God bless you. The way you pour your hearts out into this community is amazing. God bless you, truly. We are going to go straight into today's session. I'm not going to take a lot of time today. I know some of you guys are saying, yeah, when Cliff said he's not going to take a lot of time, it's going to be a lot of time, but I promise. We are going to finish our series today. But drop some number ones in the chat. Let me know if you can hear me loud and clear. And if, by the way, if you have not invited somebody also to the stream, kindly do so. Because it's important that you let people know that we are live. In fact, we are about to finish our last episode of the you behind the strategy. But even though I don't want to take a lot of time, there is a declaration I want us to declare as usual. And I want you guys to pay attention to this declaration a lot because believe me, sometimes the reason why the declarations is important is because it's part of identity rewiring. You see, as a human being, you are wired in a certain way. You grew up in a certain way. You heard certain words that has made you believe things in a certain way. And if it was by hearing and speaking that wired your mind, then the same process, but a different rewiring can change your mind. Today's declaration is quite very simple. I want you to tell yourself wherever you are that lack is not your portion. L-A-C-K, lack is not your portion. Lack is not your portion. Lack is not your portion. That in your becoming, in your rewiring, that lack is not your portion. Declare it to yourself that lack is not my portion. Lack is not my portion. This is not about you speaking words that sounds foolish. This is about you telling yourself that the things I may have heard, you may have heard things like money don't grow on trees. I don't have. This is not for people like us. There are people here right now, they are in some cities and they have never found themselves in a place where it looks beautiful, amazing exposure. And the reason being is because they don't believe that those places are for people like them. They will tell themselves things like, I don't even have money to go there. It is true, but if you can buy even just a bottle of water, then you deserve to go to that place to get exposure for yourself. Do you know why? Because as a human being, you cannot become what you can't picture. Let me say it again. You cannot become what you can't picture. That is why it is easy to picture lack because you have seen it. It is easy to picture poverty because you have seen it. But to be able to picture abundance and put yourself in it sometimes look like a problem. So one more time, in 3 times, tell yourself, lack is not my portion. Lack is not my portion. Lack is not my portion. I truly want you to believe it. And you see, today I almost get tempted to teach on a topic, the psychology behind lack. Or in other words, the mindsets that causes lack. I wanted to teach that. I believe a lot of people need that. However, as I promised, today we are finishing the last episode of the you behind your strategy. So God willing, next week or maybe the week after, I will teach that. I want to teach something else, but we will see. Maybe either that or whichever one, I will talk about that. Then before we finish today's masterclass, I have an announcement for you guys as well. But if you are new right now on this live stream and this is your first time that you are tuning in or somebody invited you, welcome. If you were a mentor on this masterclass, God bless you, welcome. If you were invited by somebody, the person that invited you, I'm giving thanks to the person as well. One of the most amazing things that happened a couple of few days ago is I had the privilege and the honor to meet the individual who won the spotlight of the month. The individual who won the spotlight of the month. We met him. I met him personally. I had an amazing conversation with him. It was amazing. Omega was an amazing, humble person. and it was very beautiful. So we had an amazing time with him, myself, and the team. We met Omega and we thanked him for every single thing that he keeps on doing for us as a community. The comments, the supports, it was beautiful. So that was very beautiful. So Omega, if you are still here, thank you so much for who you are to the TP family, your support, your comment, your honor. We truly, really appreciate it. Now, one more announcement, and then I'll go straight into today's teaching. Is we're about to start something. It's called check-in segments. It's going to happen every single last Saturday of every month. So listen to this carefully now. Check-in is going to be a segment whereby 3 to 5 people, maximum 5 people, 3 to 5 people will get the chance to come into the room. When I say the room, the stream room with me, and then they will get a chance to get a live consultation so that other people can also learn from this segment. Because when people get a chance to ask certain questions, other people get a chance to learn from something they didn't know how to ask it or to put their words together. And so, number one, it will be a very beautiful time to spend time with some of you guys from the YouTube channel directly into the streaming room or the backstage, and we will be able to come on the stream with you. So if you are camera shy, you need to start getting your things together. You need to declare to yourself and say, I am not camera shy, because we are going to have an amazing time here on this masterclass as TP family. So some of you guys will get the opportunity to come and hang out with us in the room. 3 to 5 people. The team is going to structure an amazing forms that anybody who wants to be part of this every single month, you will fill the forms, and then we will tell you which months that you can be able to make it to the stream with us every single last Saturday of every month. Last Saturday. Keep that note. So we will start this month, which is, I don't know which specifically the day, but yeah, we're going to start this month, God willing. So the team will communicate with you guys effectively. If you guys are excited, by the way, drop some ones in the chat. Let me know. The purpose of that truly is to bring life and simulation, conversations to people to learn something much more than me just talking, but rather a life transforming moment. So we're going to go into today's segment. I'm super excited for the last episode of the You Behind the Strategy. Ladies and gentlemen, so the last couple of few weeks, we started a series, and I titled that The You Behind the Strategy. This series was very important to me because a lot of people are desiring certain type of trading style, whether it being scalping, whether it being intraday, but they don't know that each and every single one of these trading styles is connected to a personality. So it doesn't matter even if you desire scalping, maybe because you are tired of waiting for setups. That is not the basis of why you should choose scalping. That as an individual, there is a mind, there is a mindset that needs to be connected to when you are choosing a trading style. That means you have to get to know who you are. Are you guys with me? You have to get to know who you are. So during the scalping stage, we spoke about something very interesting, and we said with scalping, the individual is going to be making rapid decisions. The individual is going to be making decisions that is very rapid, meaning that you are thinking over and over and over and over again about how you should go about that moment that is happening in a minute, in a second. And if you are somebody that you are always emotional, what is going to happen is you will start feeling that making more than 2 emotional decisions in a day could sabotage your trading. So that's for the scalping side. So we discussed so many points that let people understand how they can be scalpers and how they will know if they have the trait to be a scalper in the first place. Then we went on to what we call the intraday trading. With the intraday trading, we started by explaining that the word intra simply means within. And so if intra simply means within, then intraday trading simply means a certain type of decisions in trading that you make within the day. We spoke about something very interesting, and I said, trading is not the only thing you do in the day. You wake up, you cook, you bath. If you're a single mom, you take your children to school. If you're a single dad, you do the same. If you're a parent, you manage the house. You do certain things. If you are a 9-to-5 worker, you are working during the day. So if you say you are an intraday trader, then it's going to be a little bit quite very interesting, because you need to be able to structure then your day so that the trading time will favor you. And so that specific, masterclass was to teach a certain reality that yes, you can choose to be an intraday trader, but beyond just a strategy, your environment and then your schedule also matters. Because if you are making emotional decisions, let's say around your children, then if they are stressing you, it will affect your trading life. Why? Because your trading life and your actual life, they mirror each other. And so as an intraday trader, one of the things you don't have to joke with is systems and structures that makes you to be able to perform well. And so, and then last week we spoke about something that is not connected to the series, but today we are going to finish it up and we are going with the title, Psychology Behind Swing Trading. Please write it down. Psychology Behind Swing Trading. Psychology Behind Swing Trading. The psychology behind swing trading. Psychology behind swing trading. When I was, when we talk about swing trading, the first thing that comes to people's mind is something that gives you more money. You see, in trading, if you always connect everything to more money, small money, more money, you're not getting the idea of what is required of you. So I think we have done justice to the word psychology on this platform a lot. Right now, you understand psychology just simply means the study of the human mind, the behavior, and the emotions of that individual behind certain things that they do regarding decisions and so on and so forth. So if you say psychology or the mind of a scalper, you are basically saying what type of mind can scalp and what type of mind should the mind become to scalp. If you say psychology of intraday, you are basically saying what affects the mind, the emotions, and the behavior of that trader when they are doing intraday. So when you say psychology of swing trading, the same thing, that there is a certain kind of mindset you need to have in order for you to be able to even participate in swinging your trade. And so that is what we're going to be talking about today. And to know if this is meant for you and if you want one, how do you become a swing trader? Very important. Okay. So one of the first things that you need to be able to understand is this. When we say the word swing, the word swing is a word that you need to understand. It means back and forth. Okay. When we say you are swinging something, when children sit on a seesaw or whatever, they swing. So swinging, whether you are swinging a bat, is back and forth. Okay. You swing the bat. It's not just forward, it's back and forth. So the word swing should give you an idea that it's a back and forth term, meaning that something is going up or down or forward or back, swing. Okay? So automatically, this should let you even understand that, if swing is back and forth, then it means something. So when you talk about swing trading, mostly, the reason why people get disappointed and they sometimes ask too many questions is because they are forgetting that if this is called swing trading, then there is going to be back and forth involved. Back and forth of what? Market going up, coming down within the same move. Are you with me? That means that it's going to go up, but it's going to also come down, but it is still swinging. So people normally think that swing simply means that the market has to keep on going while I'm holding the trade. And so when it's coming back, they will ask me, some people will ask me questions like, Cliff, do I bring my stop loss to break even? Do I bring my stop loss into profit? All these questions that you're asking me is not necessarily to protect your capital. It's that you are just trying to see if there is a way that you can get a trade that will keep on going and not coming back. No. If you understand what we're about to talk about here today, you will understand that, so then if I'm going to be a swing trader or if I'm going to be holding trades, because one name of swing trading is holding trades, is trading that you keep on holding on. So you need to be able to understand that the first thing is swing trading. The minute it drops in your mind, then it means that you are about to engage in a certain type of trading that involve up and down within a move. Are you with me? And so I wrote down here that it implies motion. If you are talking about the word swing, it implies motion, and it has a starting point and an ending point. Okay? And then a movement in between. So what that simply means is that if I am swinging a bat, okay, if I am swinging a bat, I may start from here and I may end here, but within the here and the here, there is a middle. Okay, so it has an ending point and it has a beginning point. And that frame is what we are swinging interval. So as a human being, you can't swing a bat from Dubai to Ghana. You can't swing a bat from the UK to Canada. That is not how it works. You cannot swing like that. Your hand is not that long. Okay, so swinging always has a starting point and it has an ending point. All right. The reason why a lot of people associate swinging with more money is because it's associated with more pips. Are you with me? So that means swing trading is associated with timing. And normally this timing is not a day or two. If you hold a trade for a day or two, it's not necessarily classified as swing. Swing is supposed to last for weeks. And sometimes some people can even hold a trade for months. And then we have one of them that is called position trading. That is a very long time, but we're going to just stick with swing trading today. Are you with me? So at the end of the day, you need to understand that there is motion. That means you're going to see movement, but there is also a start point and an end point. And there is also momentum, not speed. And this is where a lot of people that are not patient enough fall with this mindset. Momentum is not speed. There is a difference between momentum and then speed. But then swing trading or swing in general has momentum but not speed. And I wrote down here that a delay between action and then result. So you can basically see that the market is going all the way up, but it doesn't necessarily mean that it's going to keep on going up the way you want. The fact that it's going up and coming slightly down, which we call retracement, does not mean that the swing trade has stopped being in motion, has stopped. You understand what I'm saying? So this is where a lot of people, literally mostly get it wrong. So I wrote down here that swing trading then literally means holding a trade across the natural back and forth movement. So when you are holding a trade, it means right now you need to be able to understand the realities of what could happen in the market, and then the mindset you need to be able to have to survive holding that trade. So the psychological implication here is that to swing means you allow movement. Please write this down. To swing means to allow movement. It means you don't force, you flow. You don't force, you flow. Now, we are going to really learn a lot today, and I'm really excited because I believe that if you pay attention, you can be able to understand a lot of things. A lot of things. You see, why psychology is different in swing trading, or when you are studying the mindset of a trader, because for me, do I classify myself as a swing trader? I wouldn't say yes, but do I swing well as a trader? The answer is yes. I can hold trades. But one of the things that I just realized back in the days when I started trying to hold trades, one of my biggest problems that I had was this. I was the kind of person that I didn't have a problem holding the trade. I just had a problem holding the trade because the money had to quickly come out to pay something. So that was the issues that I had back in the days. I remember very well. I think I'll never forget. It was in 2014, thereabout. 2014, 2015. I'll never forget. And at the end of the day, I had to pay, my rent. And during that time, the reality is, I was living among Russians and Ukrainians. And so if you know the way Russian speaks, it's not a joke. If they are angry, they are angry. So my landlord is a Russian. And I remember very well that, he was knocking. I think he came with his wife and he was knocking on the door. And so at that time, the money wasn't ready yet. It's not like I didn't have it. I just didn't want to withdraw it because at the end of the day, I wanted to keep on making more on top of the money to make sure I keep it. And I'll never forget that day. And that time, when he knocked on the door, and I remember perfectly well, he said, Clifford. He was knocking on the door. Boom, 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 Clifford. Давай это деньги, будь ласка, что делать? So he was like, Давай деньги, Clifford, что делать? So he's angry. He's like, bring the money, Clifford. What are you doing? It's like, but I'm pretending I'm not in the house. But I'm in the house and I'm hiding at the back of the curtains because he can open and enter the room, because when he enters, I don't want him to see me, because when he see me, what am I going to say? Give him an excuse again? And so what happened was he left. And at the end of the day, it's possible he knew I was in the room, but when you are able, that is why I said that lack is not your portion. You see, ladies and gentlemen, one of the things that you need to understand is a lot of people, I counsel a lot of people in a weekly basis. Believe me. So I talk to a lot of people, and I'm telling you, one of the most common problems that I've seen that is affecting people's mind as traders is lack. When you don't have at the right time, it destroys your pattern of discipline. Do you hear what I just said? If you don't have access to resources at the right time, no matter how disciplined you are, something will happen to your habits. So there are many people that I speak to on a weekly basis. Some of them are very, very, very elderly people. Some of them also are young, and so on and so forth. I counsel a lot of people. And one of the things that I can tell you, one of the most common issues I find in people is life issues. They are either having debt, bills, and so on and so forth. So imagine somebody knocking on your door telling you, Clifford, давай это деньги, что делать? And at the end of the day, you are panicking. How do you go into the market and trade well? It's impossible, because that voice is going to be what is ringing in my mind. So as a human being at that point, I'm going to make a mistake. So even if I want to hold trades, while I am desiring to hold a trade, davai dingi is ringing in my mind. So I'm scared. So I'm going to davai the dingi. I'm going to bring out the money from the account. Either try to make more faster and blow it. So that is when you see people switching in between. Today, that guy is a scalper. Tomorrow, he's an intraday. The next 2 weeks, he's a swing trader. The minute something happens, he goes back into scalping. So one individual, he doesn't know who he is. He's trying to know who he is. He comes on these masterclasses. We tell him that he needs to identify his personality, but because of issues of life, he has to try to survive. So one of the most difficult things that people face in this industry is the survival mentality. And it's not their fault. But you need to know that this can affect you. Therefore, even though trading is an amazing business, I always tell people this: never, and believe me, take it from me, never let anybody convince you that quitting your job to focus on trading sounds cute. It's not, chief. You'll be hungry. Believe me. If you are here and you are working and your money is giving you, your job is giving you some money a little bit, find a way to structure time and don't overtrade, but benefit from the financial market. But quitting your job to focus on trading is not a good advice. Don't let anybody confuse you otherwise. Believe me, if you go broke, you will suffer more than your boss was stressing you as a trader. And so issues of life is one of the reasons why a lot of people struggle being behind a strategy. And being swing trading, one of the reasons is that. Because in swing trading, listen to me carefully now, there are going to be sometimes you will be in profit and the market will come all the way down again to the entry and it will go all the way back again past the entry. Now, 2 reasons is going to happen. Listen to me carefully now. Number one, if you are in the trade and let's say you have used a right lot size and you have made, let's say, $300. Now, $300 is good money. But you are trying to swing to make more, or you're trying to hold to make more. Good for you. However, that $300 can still come a little bit down and maybe give you, let's say, negative, maybe it will come all the way down to $50 profit. Now, $50 is not $300, but your brain, to be able to hold that, not everybody will survive. So sometimes people will now close the trade. And as soon as they close the trade will still go there because momentum wise and direction wise, nothing changed. But because you are looking at the 300 coming all the way down to $50, something in your brain is telling you, if you knew, you would have taken the 300. And now you are forgetting that you are a swing trader. Are you with me? So it is very important that you understand all the psychological pitfalls that comes with this style of trading so that you'll be ready like a military man, knowing that on this ground I am standing, AK-47 can be fired. Therefore, find shelter. So you need to understand that when you are in a trade, there can be a pullback. That means you can go into $300 profit and you can come back into $50. You know what that means to a bigger account? It means if your account is big, you can go into $10,000 profits and come back to $3,000 and still go back to 50K because that is the nature of the market. But going to 10,000 and coming to 3,000 does not mean the move have changed. But Cliff, what if it come back to 3,000 and it doesn't go back again? That is the game. And let me tell you something right now, guys. Listen to me carefully now. Listen. I get messages like this, Cliff. Should I preserve my capital? Do I move stop loss to break even? Should I basically close my trade? Now tell them, listen, in trading, there is nothing like should I or shouldn't I. It's about consistency. If you are going to be moving your stop loss to break even, keep on moving your stop loss to break even to let the numbers add up. If today you are moving stop loss to break even and tomorrow you are closing it early, numbers will not add up. Numbers are very interesting principles because 2 times 3 is 6, but 2 plus 3 is 5. Same numbers, different outcome. What change? Are you with me? So when you are changing your strategies and your decision making in the market, it changes the outcome, the overall outcome, because trading is a game of probabilities. So if today you are cutting the losses short and tomorrow you are letting it ride, but you're not sticking to one outcome, what is going to happen is after hundreds of trades, you won't be able to find the right risk to reward ratio, because normally it's easy when the trade is going to hit your stop loss. But when it's supposed to be held to go to all your TPs, it's hard. Why? We're about to talk about that. Are you with me? So I wrote down here the key psychological traits that is needed for you to be a swing trader. Please write this down. I wrote down here the key psychological traits you need to be able to be a swing trader. Number 1 is called delayed gratification. If you are somebody that you struggle with delayed gratification, swing trading is not for you. Even if you want it to be for you, you need to understand that you're going to face that problem. What is delayed gratification? The ability for you to be able to say no, even though you have the choice to grab the opportunity. Because you are looking at a bigger picture. Okay? So if you are somebody that you struggle, let's say, for example, every time there is food you want to eat. So one of the tactics I used to give to some of my clients is I would tell them, this week you are going to analyze the market and you are going to stay away. Yes, they are good trades. You are going to analyze it and it's going to do what you said it would do, but you're going to stay away. We are practicing delayed gratification. A lot of people believe that every single thing that moves in the market is theirs to grab. It's not true. It's not true. As a trader, staying away from good moves is also part of trading. Believe me. Sometimes when you are starting like this, you need to do everything. Sometimes people will tell me, oh, Cliff, but what about my risk reward ratio? And also what about the numbers game? It is true. That is why you need to have a range of numbers. But some people don't have a range. So what I mean by that is you need to be able to tell yourself, I am taking only 3 trades in a week. If I get this, if I get that, I will stop this. It is all part of the strategy. But telling yourself that you will take every trade that moves every week and every minute is not good structure, because you are going to get tired. So number 1 is delayed gratification. If you cannot say no to certain things, even though you can have the privilege to take them, you are going to struggle in swing trading. Number 2, I wrote down here emotional endurance. Emotional endurance is not emotional intelligence. There is a difference between emotional endurance and emotional intelligence. Emotional intelligence is the ability for you to be able to be aware of your emotions, the ability for you to be able to interpret it, and then how you can also interpret others as well as yours as well. Does that make sense? That is emotional intelligence. So you understand emotions, you are able to interpret it, and then you are able to interpret other people's own as well. That's emotional intelligence. So you know how to regulate and all of that. Emotional endurance is the capacity you have to be able to hold on to something. So let's say, for example, you can say, oh man, I don't get angry easily because people have not really insulted you that much. Can you hold a lot of insults? Maybe yes, maybe no. So you need to be able to understand that emotional endurance is important. Number 2, conviction under uncertainty. You see, one of the things that you're going to be facing in this market a lot is uncertainty. Cliff, what do you mean? Nobody knows what will happen in the market tomorrow. Nobody knows. What we are doing is we are using data to speculate. You remember I told you guys in the strategy and I said something. I said, everybody knows the what of a strategy, but not the why. Why is this doing this? We don't know. We can basically based on past tense. But then why Trump is angry today or tomorrow, I don't know. If he tweets something right now, I don't know. Everybody is telling us why Trump and Elon Musk is fighting. The real reason, I don't know. They can just wake up tomorrow and say, hey, you know what? I think I'm going to sell Tesla. And something can happen to NASDAQ. I don't know. So the what we can tell. The supply, the demand, the support, the resistance, we can tell all of that. But what about the why? Why did they do what they do? We don't know. Some people know, but most of us, we don't know because we are at the bottom of the hierarchy, is the truth. So you need to understand that conviction under uncertainty, meaning that the ability for you to not let your cognitive biases affect your biases is important when you are swing trading. Let me give you an example. Imagine if you say you are going to hold a trade from point A to point B, but then while you are in the trade, something keeps on happening. The ability for you not to be anchored to your bias, but to keep on reviewing it to make sure nothing has changed and you are still on the right path is key. Are you with me? So still being convicted, even during uncertain times, is part of the trait you need to have. The last one is letting go of control. Ladies and gentlemen, there is going to be one topic I'm going to be teaching here on the masterclass called illusion of control. Illusion of control is one of the most powerful problems that a lot of people face, and it affects traders as well. A lot of people want to be in control. If you ask people right now, why do you want to become successful? Beautiful, they will say that I want to become financially free. In the back of the mind and the head, they just want to be in control. Nobody wants to be controlled. And it is true. It's not a bad thing to have, but thinking you can control everything is the issue. If you're not careful, you will end up thinking you can do something for the market to move in a certain way for you. For example, people sometimes actually end up believing just because they are in this trade, somehow it can find itself pushing up. Chief, you are joking. That is not how it works. So you need to understand that the last point is letting go of control, meaning if you have entered a trade, you have entered a trade. There is nothing you can do but to focus on your data. If so, finish. Are you with me? Today, as I said, I want to keep it very, very, very fast, and we keep on going out from there. Now, the next thing that I wrote down here is core psychological struggles in swing trading. So right now, we have talked about the trait you need to have. So some of the traits I said was delayed gratification. Number 2 is emotional endurance. Number 3 is conviction under uncertainty, and then number 4 is letting go of control. These are traits, meaning that it's not that it's perfect in you, but you are somebody that naturally you are able to delay the things you want to gratify yourself in. You are able to be emotionally your endurance. You are able to receive convictions even when things are under pressure. And you are somebody, you let things flow. You let things flow. If that is you, then swing trading, you are going to survive there in there a little bit. But let's talk about the core psychological struggles in swing trading. Now, here are the things you need to understand. When you enter into swing trading, I was looking for the first point to write down so that you guys can write it down. And I wrote down something here that the first thing I wanted to be on the top is doubts after entry. You see, one of the most critical psychological struggles swing traders will go through, or they always go through, is doubt. You enter the trade, it's doing what you said it would do. If it start to turn around a little bit or it start to move in a way, remember what I told you? I said swing means up and down, forward and up. It's called swing. But then it causes a lot of people to doubt because the market is ancient, it's old. It knows the way people think. And so it knows that 90% of people will always doubt themselves, even if they say they believe in what they are doing. So one of the first psychological struggle most traders face is doubt after entry. The minute the price start ranging, the minute the price start pulling back or something, they start to doubt their entry. So that is the first thing you need to know that as a trader, you are going to be facing when it comes to swing trading. Number 2 is premature exit. This one is a big one, ladies and gentlemen. A lot of people have always, if this is you, drop some number ones in the chat. Like you always get out of a trade and right after you got out, you come back and tell yourself, man, why did I even get out of this trade? And you see, that pain of getting out of a trade prematurely is equally the same painful as stop loss. It's true. I'm not saying that let that pain affect you, but your brain doesn't know the difference between the two because the two attach you in the same way. Letting something go and losing something, the pain is the same. So premature exits, it's not what is painful. It's premature exits that did what was supposed to be done after you exited. It's equally painful like a trade that kicked you out and also went to your direction. I'm talking about stop loss now. Are you with me? So as a trader, you need to understand, Cliff, can the trade still kick me out? So listen to me carefully now. I want to give you guys some light bulb moment right now. Let me share my screen. Let's bring the whiteboard on. I want to share something. There is something that I want you guys to understand about premature exit here. It's very important you understand that. Because if you understand that, you are going to understand that, look, you need to be ready to be a trader. Trading is not something that you assume you will survive. You need to know what you're about to do. I'm about to do a simple illustration here so that you guys will understand exactly what I mean. Give me a second. You guys are learning? If you guys are learning, drop some number ones in the chat for me. Let me see. Okay. Okay, so there is trader A. Okay. So there is trader A. Okay, trader A. Trader A entered a trade. Okay, he entered a trade. Let's say they are all trading gold, okay? Let's say they are all trading gold. So trader A entered gold and he entered buy. Now with this buy, let's say they are all swing traders because we're talking about swing trading now. So let's say now he entered buy. And when he entered the buy, what happened next was he went into a profit of, let's say 100 pips with a lot size of 0.10. And let's say he's targeting 250 pips. I'm just saying. So currently right now he's in a profit of $100. Is that true? 0.10 is $1 per pip. So he's in a profit, maybe give and take with the spread and every single thing. He's in a profit of $100. Okay. Now with this $100, let's say the trade keeps on going. And then there is because right now, guys, listen. Right now, 0.10 can still blow your account if your account is small in gold. You guys know that, right? Like right now, gold is not the same gold anymore. It's not baby gold anymore. Whereby even 0.01 right now, it's so sad, but I've seen people. I get a lot of messages, but I've seen people that are blowing their account with 0.01. So right now, gold is no more a baby. Okay, so you need to understand the reality now. Anyways, let's stay on course. So one thing you need to be able to understand is that this 0.10, maybe the $100, you can come all the way down to, let's say, $30. Okay, that's 30 pips. This $30, maybe it will sort of kick you out of profits and then it can still go back. So this is the closed profit. But then gold can still go back to 250 pips. Are you with me? So check this out. Gold can still go up again after it kicks you out of $30 in profit and go back to 250 pips. But this is the reality. It can also go all the way down a little bit past your entry before it will go back to 250 pips. So let's say you are somebody that you are saying that, okay, then I will not close at least some profit. It can still go all the way down and hit your stop loss and you will lose and it will still go back again. So normally, this is the gap people are struggling with. They are wondering, then should I bring stop loss to break even? Should I close it at 100 pips? Should I swing? what should I do? This is the answer. It's not about what you should do. It's about what you should be consistent with. If you are going to basically always bring your stop loss to 30 pips in profit after you are at 100 pips, do that over and over again. Yes, sometimes it can come and kick you out. Sometimes it may not kick you out. It doesn't matter, but be consistent. If you let emotion let you close it, stay in, close it, stay in, numbers wouldn't add up. Are you with me? Good. So this is the problem that a lot of people are facing right now. They are wondering, should I bring stop loss to break even? Should I? It is not that question that they are asking. It's not a risk management question. It's a psychological, emotional question. They are trying to understand, Cliff, this thing is paining me. That I have entered a trade, Cliff. And as I entered the trade, it went into 100 pips. And can you imagine, Cliff? And I'm listening. Yeah. I can imagine. And I'm listening to them. It's like, Cliff, the trade just came all the way down and it just hit my stop loss in profit and it went all the way back. I'm saying, yes. He said, Cliff, what should I do now? I said, Chief, nothing. Keep doing it. Keep doing that. There is nothing you can do. It's the market. Be consistent. Always keep on bringing your stop loss to profit anyways. Because there are days what is happening to you will not happen to you and it will go straight to 250 pips. Those days are the days you are trying to catch more. These days that is kicking you out, you are trying to preserve your capital. Remember, a stop loss is not a loss trade, it's a stop trade. So while you are still targeting 250 pips, you are still respecting preserving your account. Or if you don't want to do that, you can let it ride. But remember, it can also come and hit your stop loss and still go back to 250 pips. But you got to choose one. And you got to choose it and stick with it consistently. That is it. So, at the end of the day, where are we? Number one, you need to be able to understand. What did I say? I said that you are going to be able to understand that you're going to doubt your entry. That is one of the psychological struggles. You're going to doubt your entry. Number two, premature exits. Number three, attachment to the market. Checking the chart every hour as a swing trader. I understand, but it's not right. As a swing trader, you need to be able to let it flow. I almost sang a song. Let it flow. Let it flow. I'm being tempted. Let it flow. Are you with me? Let it flow. As a swing trader, checking your account every single hour is not a good behavior. Because you remember, you know the point is going to. So set and forget. Structure your risk management. You can set alarm on TradingView, or you can even also basically create alarms, if you are using other third-party risk management structures, whatever one, or you can do that. Okay? So, psychological struggles. Number one, you are going to doubt your entry because it's not your fault. Number two, premature exits. Number three, attachment to the market. Number four, fear of missing out. One of the things you are also going to struggle with as a swing trader is when you have friends that are scalpers. You are in trouble. If your trading buddies are scalpers, you are in trouble. This is what they're going to do. Hey, bro, did you catch the gold? Like, no, I'm waiting for 3,000 area. 3,000 area. Oh, you just want to catch this. Oh, yeah, bro. But bro, the market is moving. I was able to catch 100 pips. I caught 50 pips. With gold, you can catch 100 pips now easily in an intraday. So while they are telling you, you are just like, oh my God, I'm waiting. And especially imagine waiting for 3 days for a move and you hit stop loss. I have, my younger brother, he trades. And he used to say something. He used to say that he doesn't know why he will wait for a move for 4 days and still hit stop loss. He would rather want to hit a stop loss now than to wait for 4 days and hit a stop loss. It sounds like an interesting idea, isn't it? But everybody's personality is different. So you need to understand, if you're a swing trader and all your friends are scalpers, you are in trouble. They are going to bully your mind. No, they don't do it intentionally. Because remember, scalpers, they are very hyperactive. They are just trying to express their joy in the back and forth that they are doing in the market. So if your friends, I'm not saying cut scalpers off. I'm basically just saying these are the couple of few things you're going to realize. So when a scalper comes to you and say, bro, you're not catching the gold, you're like, oh no, I'm waiting for mine. But the ability for you to say that, you need to have capacity. Capacity here means resources. If you are hungry, you will listen to him. Are you with me? So FOMO. Struggle number 4. So 4 struggles. Number 1, doubt. Number 2, premature exits. Number 3, attachment to the market. And number 4, FOMO. I wrote down something. I want you to write it down with me. The longer you hold a trade, the louder your inner voices become. Please write it down. The longer you hold a trade, the louder your inner voices become. The longer you hold a trade, the louder your inner voices become. Now, the next thing we're going to be talking about here is I want to break down some neuroscience concept for you to understand that it's not your fault why you are feeling the way you are feeling. Remember, your brain is an organ. So, for example, if right now you come to me and say, Cliff, I've not been, it's a Cliff, maybe for 10 days now, I've not peed or I've not used the washroom. That is not good news. You are sick. So as a human being, you need to use the washroom. Are you with me? So when I say that your brain is an organ, it means certain things is normal for it to happen to you. Let's look at that. The first one here, I wrote down here that instant gratification. Remember, we spoke about dopamine and trading in one of our master classes. Your brain is wired for instant gratification. The current version of you right now is not a delayed gratification individual. You like instant gratification. They call this generation the microwave generation. Sharp, sharp, right? You want it now. It's not your fault. We want it now. You scroll through the Instagram. You want it now. TikTok. We want it now. You know, Cliff, how long will it take me for me to become a profitable trader? You want it now. It will take you a long time, Chief. But you want it now. So instant gratification. So the brain, because of dopamine spike, your brain is going to struggle to be a swing trader right now. It doesn't mean that you don't have the possibility of becoming a swing trader. It's just that you're going to struggle right now. It doesn't matter even if it's wins or losses. Your brain just wants to open and close. Open and close. That is your brain for you. Dopamine spike. That is why there are times that, recently my whole entire notifications is off. WhatsApp, whatever. I have to go on WhatsApp in order for me to see messages because the notifications is a lot. There was a time I realized that even when I don't have any messages, I click on my WhatsApp to do what? Nothing. Dopamine spike. It's not good. It's not good. But it's what is happening. And I was like, no. This must stop. Why am I clicking on WhatsApp even though I don't have any messages? Dopamine. So as a human being with all the things that is going on, Instagram, social media, all of that, and every single thing that is going on, dopamine spike is becoming an addiction now. It's already an addiction. We're already addicted to so many instant gratifications. So as a swing trader, you are going to face that problem. Are you with me? So that is the neuroscientific reason that I wrote down here that when you close a trade with profit, even a small one, you get a dopamine hit. You remember what I told you? So you said you're going to swing trade. You say you're going to hold this trade. It has gone into some profit, but your brain start telling you, bro, just close the profit. Listen, don't be greedy. Your brain can even speak to you and tell you, listen, listen, the brain here is an interesting organ. The mindset is an interesting thing. Look, the same mind that is going to tell you, don't be greedy when you are trying to swing is the same mindset that will tell you, go more when you are scalping. Isn't that interesting? That's like as if you are trying to not be greedy, your mind will tell you, oh man, congratulations, don't be greedy. That same mind will whisper to you, bro, like imagine if you put extra lot on this, bro. Same mind that is telling you don't be greedy. So you need to be able to control your mind. How do you do that? You need to understand the information you are learning. That as a human being right now, the current version of you loves instant gratification. And therefore, you need to practice delayed gratification. So I'm giving you a tip in one of the way that I transform, I give people transformation programs. One of the ways is that analyze the market sometimes and choose to stay away. So I remember anytime I say this, people are like, man, Cliff, as a trader, you need to fast. Not fasting away from food, fast. That means you know the market is moving. Choose certain days you know the market has volatility and choose to stay away. Kill that tendency of now. Listen, guys, transformation here, you have to be intentional about it. I'm telling you the truth. And so your brain loves immediate reward. That is the first thing you need to understand. Number two, your amygdala. I don't want to be too scientific. The amygdala is like a bean shape. It's at the back of your head. It's what is responsible for emotions and so on and so forth. I don't like talking too much scientific on these calls so that people are like, hey, Cliff is trying to show off. It's not true. That is a name. There is no other name for amygdala. It's called amygdala. So your amygdala is what is responsible for storing emotions. So let's say, for example, right now, I see a certain kind of person, and this person remind me of my high school, immediately my brain will now bring all the emotions I felt in high school back again into my heart, back again into my mind. So your brain, every single experience you are having, all the revenge trading, every single thing you have been going through is storing these informations. So let's say, for example, you are hitting stop loss at break even, and that pain in your heart made you feel, oh, why didn't I even close this profit? Your brain is going to remind you of that event. It's going to remind you. It's not reminding you because it's bad. Remember, you are wired to survive. I was speaking to an individual, I think yesterday or so, and I said, look, you guys know manual cars versus automatic here. If you grew up in Africa a little bit, or if you are still in Africa, you can relate with this. If you are still in Ghana or Nigeria, I don't know. West Africa, I don't know about other countries. But in Ghana, I remember when that time, manual cars were the only thing we were using. But you see, human beings are funny. Imagine the guy who had 4,000 horses many years ago was told, hey, we are about to develop a car. That person with the 4,000 horses would be like, man, like, get out of here. We don't need no cars. We got horses. What do we need cars for? But now we have cars. So the person with the 4,000 horses, nobody cares about horses anymore other than using it for, fun and racing and whatever. Same thing. I remember when we started to see automatic cars, it was very rare. So everybody was driving manual cars. And you will hear people sometimes say, why are you buying an automatic car? Automatic cars are for girls. And if you heard it, so that people will not say I'm lying. I heard it. If you heard it, drop some number ones in the chat. There were people that literally believed that automatic vehicles are for girls. What does that even mean? What do you mean it's for girls? Can you imagine that somebody sat down and realized that, my God, driving manual, if you have driven manual before, you know what I mean. Imagine climbing the hill. You need to put it to this gear and that gear before you realize you have turned off the car and the car is ascending and descending. Are you with me? So somebody sat down and said, Chief, this manual thing is great, but we can do better so that the person can focus on driving. Somebody said, no, manual cars is for men and automatic cars. So because that person that is saying that manual cars is for men and automatic is for girls, that person is wired to suffer. He believes that suffering is for men. He believes that as a man, you need to suffer. If you're not suffering, you're not a man. No, Chief, you don't need to suffer. You need to be smart. So if you are somebody that you believed in those kind of structures, this is for men, that is not how life works. It's about systems. And so you need to be able to understand that in this life that we live in, every single person is wired. Things remind you of certain things. So if you are here and then I speak about certain things like declaration, and all your circle of friends don't believe in declarations, and they even insult people who believe in declarations, or people who believe in the spoken word of saying positive things, you will hate it. Even when you are trying to believe it, you will hate it. And so your mind in this context has been wired to see many things that is affecting you emotionally. Are you with me? So number 2 is how the amygdala react to unrealized, or in other words, gains and losses. So the emotions you are feeling, the emotions you are going to feel, they are both the same. Your mind doesn't know the difference. And so I wrote down here that the amygdala is the part of your brain that the job is one thing. It scans for threats. So when you go to the tip of a balcony, it is your amygdala that is scanning around. Hey, what if the balcony breaks? What if the balcony shoot? What if the balcony is not strong? What if I fall? The amygdala. That is all that is doing. If somebody presents you an opportunity, what if it's a scam? Yeah, bro. Even right now, there are many people scammers. Well, it's your amygdala. It's always scanning. So even if you are in a trade, your amygdala is scanning. What if it reverses back? What if it hits my stop loss at break even? What if? It's scanning. It's looking for threats. The job is to protect you from that emotions. So one of the ways that I tell people to train the amygdala is that every single time you have any encounter in the market, practice smiling, even though you are not happy. Chief, I know that you are not happy with that stop loss, but smile. Smile because you want to train your mind. Cliff, when you talk about mental transformation, what do you mean? It's a wiring process. So when you hit a stop loss, it's not sweet. Believe me, stop losses are not sweet, but it's just a stop trade. It's protecting your capital. So when you hit stop losses 2 times in a row, don't tell your brain, How do you turn your brain when your face is like this? It's like, bro, are you okay? Yeah, I'm fine, bro. Like, I'm fine. You are not. It's receiving the chemicals based on your facial expression. So if you do this, your brain knows you are angry and it can remember that you did something in the trading room with XAU USD. So it's like, no. Something went with Chief. Chief is angry. So when you hit a stop loss, to rewire your mind, smile. But Cliff, I don't feel like smiling. I've said this over and over again. Smile is not a feeling. Widen the corners of your lips and show your teeth. Right now, whether I'm happy or not, you see, right now I'm hungry, but you don't see it, right? Yeah, so guys, ladies and gentlemen, my name is Cliff Cheqona. You will think I'm the happiest guy right now. My brain is receiving that. It doesn't care. I'm smiling. I'm not smiling. Like, I'm really, really sad right now. I'm so sad. But you see, you don't believe me. Try it right now. Ladies and gentlemen, let's try it. Widen the corners of your lips and show your teeth. Just keep on showing it and say something sad. Man, life is sad. What is that? What are you saying? Man, life is so weird. I'm not happy at all. You see, it doesn't click. So your brain doesn't believe you when you smile and you are saying sad things. But even when you frown your face, I'm great. I'm great. This is how some of you guys do the declarations in the morning. I'm great. I'm great. I'm great. You are not great. Your brain doesn't believe you. Why are you frowning saying you are great? I am great. I am. This is how you declare. So anytime you hit a stop loss, you are not supposed to frown your face because emotions are recorded by chemicals and is recorded by chemicals when reactions are received. Are you with me? So, if you guys are learning right now, just drop some number ones in the chat. Some of you guys will start smiling the whole of this week. They will think you are mad, but it's called rewiring. Because some of you guys, your whole entire life, every day somebody is angry in your house. From the time you woke up to your mother, to your father, everybody is angry because you're about to beg for money. Because if they smile, you will say, oh, daddy, that was school fees. So he's already frowning his face. So that's all that you have seen. The face of your dad, the face. I'm sorry, but it's the truth. So sometimes growing up in an African home, you need to lie. I remember when we were kids, we would go and tell our parents we need to buy a sharpener. For what? For nothing. We just want to take the money to go and buy. Why do you need to lie to buy sharpener to go and buy food? It doesn't work like that. But that is how you grew up. So you don't even believe that there is joy in your house. Are you with me? So smile. You are not smiling because you are happy. You are smiling because you are training your mind, the amygdala. Number 3 is what I call retraining the brain to detach from short-term emotion. Ladies and gentlemen, to become a real swing trader, you have to retrain your nervous system. You are not just learning a strategy. I've said this over and over again. I wrote down here that you are rewiring your response to discomfort. Have you heard this saying before? Get comfortable being uncomfortable. It's a training statement. It's not just a sentence that is going for people who are smart or whatever one not. So this means you stop reacting to candles. You stop checking your trade every 30 minutes. You build conviction in your bias, not your current PNL. There are people that when I'm training them, I tell them to change their candlestick from red and blue to blue only, so that their brain only focus on data, but not the color theme. Because some people, your eye seeing red is already danger. It is true. Back then when I was studying myself, I realized that I was making more money in longs, in buy, and I was losing money more in sales. And I realized it's a pattern. My brain doesn't like the idea of something coming down. I always want something to go up. So when I studied that, I realized, Cliff, something going down in the market is not for your family. The market is a market. Just make money and go away. You train yourself. Are you with me? So you need to be able to retrain your brain to detach from short-term emotion. Now, ladies and gentlemen, listen. I promise you guys, I wasn't going to take you guys your time a lot because we have done a lot of breakdowns about you and, behind the strategy. One thing I want to tell you right now is this, is that in these markets, I know that there are many things that you have heard that when you come to master classes like this, it may sound like as if what is Cliff saying, but I promise you, knowing how to analyze the markets, I said this and I'll say it again, I don't care who disagrees, is the easiest part of trading. Believe me, as long as you have a brain to process, it's the easiest part of trading. But the you behind the strategy is always the problem. And so one of the things I am trying to do, and one of the things that we are going to keep on doing as a community here, is to help people to become the people that they have to become. And there is more that we have in the pipeline. There are bootcamps that is coming up. There are programs, many programs that is coming up, rewiring programs, many things, and people who also wants to have the chance to be able to have meetings with me is all coming up. But if there is one thing I want you to take out of this all series that we did, all these episodes of the You Behind the Strategy is one thing, is that the strategy will always reflect the person behind it. Now, that famous statement I always make, that the same knife we used to cook is the same knife someone can use to hurt somebody. There is no problem with the knife. It is the mindset holding the knife. Some people ask me, Cliff, when am I going to become a trader? Let's start your transformation first. Keep on learning the strategy. You need the skill set, but your attitude must also be rewired. Are you with me? So, ladies and gentlemen, listen, in the next couple of few weeks ahead, we are now about to learn serious simulation programs back to back. But as I said, as I promised, I'm going to be teaching two things in the next couple of few weeks. One is goal setting. A lot of people don't know how to set goals, so they don't know how to hit goals. Number two, we are going to be talking about luck, the mindset behind luck. Why are you still in luck even though you know certain things? Number three is illusion of control. These are the next sequence of masterclasses we're about to have. Then right after we are done, we are about to talk about emotional intelligence, advanced version, and then cognitive biases, advanced version. I'm super excited. But as I said, I have something to show you guys. Ladies and gentlemen, listen to me carefully now. So some of you guys has been meaning to ask me a long time, Cliff, you know, if we want to talk to you, if we want to do this, if we want to do that. People have been asking me many questions and so on and so forth. But today I have an announcement for you guys. And I pray and I speak upon this information I'm about to say to you guys that, look, this is just the beginning of this community. I am doing my best. The team is doing their best. We are doing our best to make sure that the infrastructures that is missing in this industry, we'll keep on building for you guys, okay? Now, we start from here. So all of you guys are saying, Cliff, we want to basically know how to get in contact with you, Cliff. How can we be able to get this system, get that? How can we get this PDF, this and that? All of that is being structured. Ladies and gentlemen, if you can see my screen, drop number ones in the chat. So if you can see my screen right now, drop some number ones in the chat for me right now. Let's wrap up. So if you come to cliffcheqona.com at this moment, ladies and gentlemen, if you come to cliffcheqona.com at this moment, this is what you will see right now. Officially right now, we have our own very website. You can come here, as you can see every single thing you see there. I'm not going to take you guys through this website. Go and explore it yourself. And then if you think, hey, Cliff, we need this, we need that, now we can put every single thing on the website. This website have every single thing you need. Every single thing. Okay, so hold on for a second. I'm coming. Give me a second. Okay, can you guys see my screen now? Perfect. Okay. You guys, okay, so you guys can see my screen now, yeah? Is it okay from your side? Okay, cool. So you guys can see it. Okay, so at cliffcheqona.com, go to this website. I'm not going to take you guys through this website. Go through it and then explore and then tell me, those of you who wants to talk to Cliff, this is it. Some of you, when they message me and say, Cliff, I want to speak with you. And then they will come and tell me, Cliff, how much? What do you mean how much? You just speak with me. Nobody's charging you anything. When was the last time we charged you guys something on the TP family? Doesn't make sense. But unfortunately, I cannot be able to, talk to everybody. But if you want to talk to me when you are having, for example, check-in here is 30 minutes consultation is designed to help you to pause, reflect, and reset. You click on it, then you will see how it goes, so on and so forth. We have some individuals, and there's going to be more. As you guys can see, all these people are TP family members. I have John. I love you guys so much. Herrera, congratulations. You made it to the testimonial side. Nelson, if you're on this call, drop some number ones in the chat as well. Also, you are here. Abati. Also, thank you so much for sending your testimonials. There is many testimonials, guys, but we couldn't add all of them now. We'll be recycling them so that you guys can be able to find yourself here as well. Now, we are going to update the check-in segment so that you can fill the form and so on and so forth. If you go to the TP system, I promise I was not going to take you guys through this, but I want to talk about the daily declarations and we are done. Yes, there is TP Masterclass. You can always go to the playlist from here. Cheqona GPT, this GPT is trained by myself by my own entire ideas and every single thing I've known in the market. It will not be able to give you all the answers you want, but it can be able to help you. It's a trained GPT by myself. You can chat with the GPT. Then we have Core Beliefs Wall, TP Bootcamp. If you want to join the waiting list, please, you can also, fill this form and so on and so forth. But I want to go here and then we are done with this. Now, the daily declaration, we have been able to put here some couple of few declarations here. For example, we have command the evening, wealth mindset. You can download all of them. Then you can use it every single morning and so on and so forth. Then we have also the TP system. Here we have other couple of few things like Core Beliefs Wall. Then we have a TP store. This is coming soon. It's going to come with our book. So there you go. And if some people also want to talk to me and it's not about other couple of few things, you can also, if it's not about consultation, about trading, and it's about other things, you can also use this place. So ladies and gentlemen, this is the easiest thing we can do for people right now. There is more coming. If you guys need anything to be included on this website, I will do it for you guys. So this is just the beginning. Okay, let's see how it goes. With that all being said, thank you guys so much for joining this masterclass. I don't want to take you guys your time too much. There is many things we could have learned, but today I wanted us to focus on what Kema was teaching, and I wanted to bless you guys with the last episode of the You Behind the Strategy. Watch it over and over again, but from next week, you don't want to miss the segment. And so I'm super excited, guys. The accountability program as well. If you want, you can submit here. Just go and explore the website and we'll take it out from. Ladies and gentlemen, thank you so much. If you enjoyed this masterclass today, whether from Willis, from Kema, and from myself, and also Shells, welcoming you guys. If you guys enjoyed this masterclass, thank you so much for tuning in. I will see you guys, God willing, next week. God bless you all and have an amazing Saturday. Goodbye.
Trading is a mind game. You heard me. Trading is a mind game. Fix your mind, fix your trading. 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 Trading is a mind game.